Thank you. So as mentioned, I'm Kirby Cundiff. I've got a Ph.D. from the University of Illinois. I'm a chartered financial analyst and a certified financial planner. Right now I'm working as a portfolio advisor and retirement strategist, and I'm currently also still adjuncting for the University of Maryland. And before that, I had quite a few different jobs. I was a chair for quite a while, or several years at the University of Maryland. I met this young lady while working in Dubai several years before that. For a couple of years, I was also running financial planning programs at Northeastern State down in Tulsa, not too far from here. And in an earlier life, I was a physicist and a research scientist at Los Alamos National Lab, and also MU's research reactor up in Columbia. So I've transitioned from physics to finance a few years in the past. Okay, so how is international finance different than studying finance in a domestic environment? Well, one of the big ones today is, of course, currencies. We're on the dollar here, and the value of it changes constantly. The Europeans are largely on the euro. You also have the yen, you have the pound, you have multiple different African currencies, South American currencies. Some are tied to other currencies, some float, some have very high inflation rates, some are less stable. When engaging in business activities, you have different levels of property rights in different countries and also different states. When McDonald's, I think, first built one of the biggest McDonald's in the world, I know the one between here in Tulsa is also commonly advertised like that, but they built one that was very large in China. China changed its mind, said, you know, property rights, we're just going to seize it. These things do happen around the world, particularly to the oil industry, as we will discuss later on. They've had a long history of problems of investing billions of dollars overseas and then having that property seized, which makes it rather hard to make money. We also have licensing laws. Doctors in the US get paid more than pretty much any other country in the world. In Dubai, when we were over there, we had very good doctors. Didn't make very much money. It was a lot easier to get in for a doctor's appointment. You could call, be in 2 hours, maybe pay $100 cash, wouldn't need insurance or anything. All those people would be very happy to come here and make a lot more money. But obviously we have restrictions on crossing borders that prevent that. And domestically, that could even be across state lines. Lawyers are licensed in an individual state. A lot of different professions are. Another issue, of course, is tariffs. We'll discuss sort of the history. The US had very high tariffs before World War I, and that was the main source of taxation. Now the tariffs are relatively low. So in that sense, it's easy to move things across borders, but you have probably a lot more regulations than you did before World War I. So we have these so-called free trade agreements, NAFTA, GATT, but they're not really free trade agreements. Free trade agreements would be, I could go sell you something, we could make a private agreement. NAFTA is like this thing of regulations. So it's really more of a international government set up control. In some cases, you have import quotas. Some of those are through NAFTA and GATT. Some of them were before that. I remember in Germany, I once took a tour of the VW factory, Volkswagen factory, and for some reason they had a quota. They were not allowed to dominate more than 5% of the US market. There are tons of different agreements like that. Well, we supposedly have free trade with Canada. I know there's quotas on importing wood. They would love to sell us more wood. We're not allowed to buy it. In the US, of course, harvesting wood is considered an environmental issue. In Canada, they would say, we've got tons of forests, we've got tons of wood, please buy it, we'd like to sell it. Same thing for Norway. One of the more interesting stories I remember in importations from Canada would be toilets. So it used to be we had these nice big toilets that would flush. They had lots of water. Supposedly there was a shortage of water in the US, I guess basically in New Mexico and Texas. So we passed toilet regulations that required the toilets to be much smaller. Well, the initial versions of those didn't work, and you'd have to flush them 2 or 3 times anyway. So there was actually a big effort to import old toilets from Canada, and they were patrolling the border to prevent that from happening. So you can have all sorts of bizarre things like this.
Black market toilet.
Black market toilets. Yep. Yeah. Other things, drugs, cars, etc. I keep using the example in here as I will. I get sinus infections, so I'll keep using over and over again the example of nasal spray called Nasonex. At least my local pharmacy in my hometown, the last time I looked at buying it, charged $350 for that for a bottle. Oh, yeah. You could buy it in Dubai over the counter for $20. You could buy it in Istanbul over the counter for $5. Fill up suitcases of this, and we would bring it back to the US and sell it until the prices went equal. And clearly that doesn't happen because you don't have free trade. I'd get arrested. And same goes for cars. When I was an undergraduate student, my German professors brought their, I believe, Mercedes from Germany. And the US had the attitude that Germany doesn't seem to have the right safety regulations on Mercedes. So they made them yank out all the windshields, replace them with US windshields. And I think they changed the exhaust system and all sorts of other things. And then places like Norway have a 300% import tax on cars unless they're over 25 years old. So there's a big market to import old cars into Norway. Otherwise, no one could afford a car.
And that is true, because even in Finland, they do drive very, very old cars.
Yep.
I was surprised.
And is that the same regulation in Finland, you think?
I don't know, but I guess that may be the case, because they're all driving like 15 and 25-year-old cars.
Yeah.
So you said like the Nasonex stuff, are you allowed to bring back enough for personal consumption?
As far as I know, the law is you can bring it back for personal consumption, and I brought back quite a bit. Both of that, yeah, both that and thyroid meds, because you can buy them over the counter there, and they're cheaper than here. And I used to be able to buy them, I guess, once a year here, and now I think it was $30 a year. Now it's $30 a month, and they won't let you buy them for over a couple of months. So it's a hassle. As far as I know, there were no rules. I never got any trouble for that. I tried looking it up once. I didn't find any laws against it. But if I tried to sell it, I'm sure there would be a problem. Yeah. And also, taxes vary from country to country. They vary from citizenship to citizenship within each country. When I was in grad school, for example, I, as a US citizen, would have to pay taxes on my graduate stipends. Many of the graduate students from foreign countries were exempt from that. So there are all these different rules, and the same, as we will discuss, goes for investing in stocks and bonds in the US. Different rules depending on where your passport. And of course, for the future, you may have these sort of complications. Travel from one place to another.
I think currently the European Union and Russia are kind of debating that whether they will accept each other's vaccines. So Russia doesn't want to accept COVID passports where the vaccine is from basically UK or US, and vice versa, where Europe doesn't want to basically accept Sputnik. So I don't know how that's going to go.
Wonderful. So I make some analogies. Well, states originally, when the United States was founded, or before the United States were founded, were basically independent countries. They aren't now, but there still are complications going from country to country, or state to state. We mentioned licensing laws. I'm licensed to sell insurance in the state of Missouri and the state of Texas if I want to. Haven't, but nowhere else. My brother's a lawyer. Can only work in the state of Missouri. Same rules, doctors, nurses. There are border inspection stations. You're supposed to be able to move from state to state, but California does stop and search people to make sure they don't have fresh vegetables down there, make sure there aren't pests. And of course, on the border states, there's actually border control not at the Mexican-Texas border, the Mexican-California border, but well within it. They do the second stops. You have gun laws varying from state to state. One you can get in trouble for is, of course, tobacco and gas taxes vary a lot from state to state. People don't try and move gas around that much, but they do try and move tobacco around. We have a friend in Chicago. I think it's $100 a carton for Marlboros there last time I knew. I think he switched or found a different way of doing it, but he would always have me buy them for $23 a carton and load up a trunk in Missouri and take them to Chicago. And they do patrol the Indiana border for that. And New York does the same thing with the New Jersey border. And of course, one of the cases that's been in the news recently was Eric Garner. Look that one back up. One of the black gentlemen that was strangled and died under police custody in New York. Well, what was he being arrested for? He was being arrested for selling loose cigarettes without paying taxes. So you can die from this in some cases. So these do complicate things all over the US and all over the world. Your textbook and most textbooks try to split up risk of international investments related to currencies, not related to everything, but just currencies, into economic exposure, transaction exposure, and translation exposure. Economic exposure, in some ways, the most general one. It's the extent of a firm's future earning power affected, how it's affected by changes in foreign exchange rates. There is commonly an argument, I don't buy the argument, but there is commonly an argument that one way to stimulate your economy is by devaluing your currency. And of course, China has been accused of this for years, of artificially keeping its currency low. What that effectively does is it gives your citizens a pay cut. So in effect, if you work for less money, yes, you can produce and sell more stuff. It may not make you happy, but it sort of, quote, stimulates the economy. So you can imagine how economic exposure would affect this. If your currency goes up, well, one of the more stable currencies in Europe is not the euro, but would be the Swiss franc. And as other countries have devalued their currency, the Swiss has devalued theirs less. So its exchange rate has gone up drastically, and it's made it more difficult for them to sell stuff, because to everybody else it becomes more expensive. I'd still rather live in a currency with a country with a strong currency, because I'd rather be paid more, stable. So that would be an example of economic exposure. It could affect whatever your business you're in quite a bit. Transaction exposure is more specific, related to the actual income statement. So this would be looking at, if I make money from overseas, how do I change that? Basically just multiply the euro by the exchange rate between the euro and the dollar and see how that income translates into US dollars. And of course, that can fluctuate a lot as the currencies fluctuate, and businesses manage this sort of thing commonly by future contracts, money market contracts, options on currencies, those sort of activities. Related to the economic exposure one, I thought I might mention one of my experiences in Honduras quite a few years ago. I don't know what the case is now, but the income was low enough down there that if you went and bought a Coca-Cola, they did not sell you a bottle of Coca-Cola because the bottle was too expensive. They sold you a plastic bag with a straw in it. I see other people have experienced that. So I remember taking a train into Nicaragua, and we had big bottles of juice. And after we drank them, we gave away the bottles, which were actually considered valuable. So, how business would be affected in different countries. And then the last one, translation exposure, is more on the balance sheet of the company. Got companies operating all over the world in different currencies. How do you integrate that? And again, the value of the goods and services in a different country will affect the value of the balance sheet, and then how the balance sheet integrates with the parent's balance sheet. And you can run into a lot of different complications in countries that they might do their actual transactions in one currency. They might keep your books in a second currency, and they might have a parent company in a third currency. I know when I was in Poland, I believe it's still the case, if you bought something small, it would be in the local currency of zlotys. If you bought something big like a car, it would be in euros. And then which currency would a company keep its books in? And then, of course, they might be also owned by another parent company in the location. Is that a question, or is that just noise?
What's this noise?
Okay.
So, Miss, do you have any questions? No, doesn't look like. All right.
So. Right now, the world is a hodgepodge of different currency systems.
We have no idea what causing that.
It's haunted.
It's something we'll have to address after.
Hey, Casey.
Yeah.
Every time that happens, the audio cuts out for us, so I couldn't hear. I can't hear anything that they say when that thing goes off.
Can you maximize that?
Yep. I did it this way so I could see my notes.
Oh,
So again, the map, and I will maximize it again after I look at it. So which countries are which way and how they define it. The above map shows countries which have adopted various exchange rate regimes. Dark green is free float. So they would consider the US and Europe a free float, meaning the euro floats against the dollar. Neon green is managed float. So these countries attempt to not directly peg their currency to another currency, but they only allow it to change within a certain range. Blue is a currency peg. So China basically tries to peg its currency versus the dollar. They do. It actually is more of a managed float. So it changes some. Where we were previously in Dubai, well, they actually do peg it to the dollar. Most of the oil producing countries do, from the history of selling oil to the US. But, and here they do list it as a currency peg. So that is a direct peg. And red is for countries that use another country's currency. So blowing it back up, why do you think these various countries would use another country's currency?
It's the one next to the minus sign.
All right. So for example, Panama has red. What currency do they use?
US.
US dollar. Largely because the US military was down there with the Panama Canal for years. I think I remember seeing in Panama some pennies they had local, but there aren't very many of them. Zimbabwe, it also uses the US. Why does the US, or they may have changed that again, at least for a recent time period, Zimbabwe used the US dollar.
Zimbabwe is the one in South Africa, right? The
Yep.
red one, yep.
I think that's Zimbabwe.
Mariana Islands also used to US dollar. I'm not really sure if it's somewhere around there.
Okay.
Mariana is towards the Pacific.
So what are these over in here?
Yeah, so yeah, somewhere around there.
Okay.
So is it that the wrong currency is so devalued?
That's what happened in Zimbabwe. As we will show later, they printed $100 trillion bills.
But they just print, that's how they do, right?
Yeah. They just kept printing. And then eventually no one accept their own currency, and then a black market develops in US currencies. And commonly when that happens, the governments try and outlaw the black market, the other currency. Argentina at one point in time was that way, and people would try and get all the dollars they could. Some of them foolishly stored them in safety deposit boxes, and then the government seized all the safety deposit boxes. They converted they allowed for a while both dollar accounts and local currency accounts, and then they seized all the dollar accounts.
Does Singapore, because I know Singapore uses the Sing dollar as well, but they also utilize a lot of US dollars, at least for US dollar companies that operate in Singapore. How do those interchange like within Singapore?
Within, I guess, I don't know. I can speculate. A lot of countries will allow multiple different accounts and multiple different currencies. And I mentioned in Poland, they do that. The US, that's, I think, technically illegal. You have to do all transactions in US dollars. So it probably depends on how much control the country tries to put on transactions within it. As we will discuss soon related to that, of course, there's been a long effort to outlaw the use of gold in a lot of different places.
There'll be another question. So there are countries like Russia and India and Pakistan and Afghanistan and and then you have Egypt and Sudan and so on. Is it that they don't want to peg their currencies to anybody, or is that nobody wants to peg their currencies to those countries?
I guess it could be both, but
Right.
more than India, obviously we know their currency's a mess. So
Yeah.
the governments that are quite irresponsible, probably India is one of those, the way they finance their expenditures is not by taxes, but they just print tons of money. So if you do that, you can't peg to another currency because it would keep devaluing and devaluing. Mexico, for various times, tried to sort of peg to the US, and then they would put more money and devalue. Obviously, that's what Zimbabwe has done. That's related to the financial crisis in Asia a couple of decades ago. They basically tried to do a peg. The government's printed way too much money and they gave up.
Do you know about Russia, why they're not pegging their currencies?
They're relatively stable now, I would assume, and since they just don't want to. They had, as I'll show a little while, like 1,000% inflation rate not too many years ago,
Yes, I remember.
90s. Yeah. But I don't know directly what their policies are. Okay. So the longest history of currency throughout the world goes to basically the use of gold and silver as currencies. The paper floating currency system we have now only goes back to the 1970s. So it does not have a very long track record, and paper currencies have failed over and over again. My guess is this one will fail eventually too, but it hasn't as of yet. So if we go way back in time, as markets were developed, I guess what did people initially do? They probably did things like, I have a chicken, I like your wheat, would you like to trade? That isn't, barter isn't that convenient, so they tried to figure out, okay, what could we trade that would be convenient? And most countries eventually adopted things like gold, silver, copper. And in the Middle Ages, you had a problem that we will see over and over again today. Gold is reasonably heavy. It's hard to carry around if you have much of it. So the goldsmiths and blacksmiths would basically develop vaults. They would operate as banks, and they would issue paper receipts for your gold, and it would be easier to trade those back and forth. So that's how the concept of currency developed. The problem with it is people tend to be dishonest under these circumstances, and the blacksmiths and the goldsmiths would start issuing more paper receipts than they actually had gold. And then these systems would break down. They wouldn't trust this person. They'd go to another person. That would go back and forth. Throughout history, of course, governments have behaved in the exact same way when they developed the system. If you're going to bet, I guess, 1,000 years from now, what's going to still have money? Well, let's look back to 3,000 years in the past. There's no stock certificate from a few thousand years in the past that says we have value in this company. But gold coins from them are still high. I would rather be in the stock market than gold, but if I was going to bet 2,000 or 3,000 years in the future, well, maybe somebody will be able to synthetically make it, but that's where your best history of value has lied.
The gold standard is always been so frustrating to understand for me, just because it's a random thing that we assign the value to that has no real, I mean, it has some value with manufacturing or, you know, whatever else, but it has very little use.
Sure.
So it's always been difficult for me, especially when we talk about people who are concerned with, you know, economic collapses and all of that, don't want to stock up on gold and silver. But if you have an economic collapse, what is gold and silver going to accomplish?
So I guess the answer to that would probably be what happens in a place like Zimbabwe. If the government overprints its currency, and you can see here, I mean, the US is relatively stable, but since the Fed, our current central bank, was created, the US currency has dropped in value by well over 99%. And a lot of that's in my lifetime, so since the 70s. So paper currency, governments tend to destroy it because they want to finance their expenditures that way. For whatever reason, human beings throughout history, what are the advantage of base metals? Gold is limited. There's not a lot of it out there. It's a lot of work to mine it, and it's relatively easy to exchange. So for whatever reason, at least it has a track history, people have used gold and silver for trade. Paper currencies really don't have anything backing them. The Janet Yellen can print, or I guess now she's the Treasury head, but the Fed head can print however many they want. So it doesn't really mean anything. You need something that's restricted. Right now, that's base metals. Bitcoin does have the advantage it's restricted. It is capped in how much will ever be issued, but obviously it doesn't have a very long history, and most people don't understand it. If I was going to bet in 100 years of value, I'd bet on Bitcoin probably over the US dollar, but I'd still go with gold. If you have devaluations like this, and that continues, and many paper currencies have gone to zero. Massachusetts introduced a paper currency, it went to zero before the US was founded. The original paper currency in the US, they paid Revolutionary War soldiers in, it basically went to zero. So paper does not have a very good history. Gold was used throughout the Greek Empire, the Roman Empire, the Ottoman Empire, Chinese, everybody used it. So it's been stable. That's basically it. It's basically just history. The graph that I'm showing here shows the general price level on the y-axis. The x-axis, it shows just the year. So this is just US history. It's domestic. It doesn't go back to the Roman Empire. And Rome did what everybody else did, I guess, as far as debasing their currency. The difference is they couldn't do paper. So what the Romans did at the beginning of the Roman Empire, the Roman Republic, they had a very stable currency, and gold and silver coins from them are still valuable. I've got a bunch of Roman coins I bought for $10, thousands of years old, but they're worthless. So why are they worthless? In the later eras of the Roman Empire, they would tax the people in gold and silver. They would take the gold and silver, they'd melt it down, and they'd stick in some cheaper metal, and then the government would try and spin it again, claiming it was still gold. And they did this over and over again until it was worthless. Well, that was their version of debasement that we do with paper now. And this argument goes of how to do these kind of banking issues, certainly goes back to the beginning of the United States. One of the biggest arguments under George Washington's term in office was between Thomas Jefferson and Alexander Hamilton, who didn't particularly like each other very well. And Alexander Hamilton was more towards the British system, and he wanted basically sort of paper money. He wanted a central bank, like the Federal Reserve System. Thomas Jefferson has all these quotes that still exist today. If we have a bank, it will enslave the people, things like that. Well, Alexander Hamilton won. So we got the First National Bank. If you go to Philadelphia, you can still tour at least the second one. The first one may still be there too. The building's still there. One of them's at least used as an art museum, so you can go look at them. And these banks did what you would sort of expect the banks to do. They tended to print a lot of money and debase the currency. They also typically did this during wars. So here we see this little bump in currency value. They label it the War of 1812. So what happened in the War of 1812, I believe Thomas Jefferson wanted to get rid of the First National Bank when he was president, but its charter was not up. And its charter did not come up until, I think it was James Madison. So what did James Madison do? He got rid of the First National Bank. Well, then the War of 1812 happened. The British invaded. They burned the US White House. James Madison had to flee Washington. He decided, I need to pay for the war. Let's print money. And they created the Second National Bank. And they, of course, printed money to pay for it. So typically what happens is you get debasement of currencies during wars. War of 1812, Civil War, World War I, etc. So we got the Second National Bank, same sort of arguments occur. Now we get Alexander Hamilton, or not, now we get Andrew Jackson as president, who basically also campaigned on hating central banking. And he basically did things that we haven't seen since then. He did some pretty nasty stuff like the Trail of Tears and, pretty nasty things to the Indians. But on monetary policy, I would say he was a pretty good guy. He fought on getting rid of the Second National Bank, and particularly fought with a guy named Nicholas Biddle, who was the head of the bank. And Biddle openly said, when you run for re-election, if you get rid of me, the bank, or try to, I will destroy the economy and the American people will blame it on you, the president, which Biddle sort of proceeded to do. But Andrew Jackson, I guess, was able to persuade the American people he was right. They got rid of the bank, and Jackson was reelected, and we had very good currency stability since then. He was also the only U.S. president to pay off the national debt. How did he pay off the debt? He sold all the Western lands and basically collected cash and paid it down. So we had monetary stability throughout this time period, the 1800s, which is referred to as the era of classical liberalism. So in many ways, you had more free trade during that time period than you do now. You had very high tariffs, as we'll discuss, but again, there weren't controls in each country, and you sort of had the opposite of what you do now. It was somewhat hard to move goods and services. Obviously, ships didn't move around that much. You did have import tariffs, but there were no passports. People could cross borders. There were no border checks. So labor could move freely from country to country. Goods was a little bit harder. Now it's easier for goods to move around than labor. Lots of Mexicans want to come to the US because we get paid better out there. That's relatively hard to do, but it's pretty easy to move goods across the board. So sort of an opposite situation. So the era of classical liberalism was interrupted by the Civil War. One of the things, many things that Lincoln did to interrupt this, one, he printed currency, greenbacks. They were retired after the war, so they did go away. He also introduced the first income tax. There was no income tax during this time period, but that was declared unconstitutional and abolished. So basically, you had no taxes. Business could do pretty much whatever it wanted throughout this time period. You had a very stable currency. The typical thing under a gold standard is prices drop gradually. So corn will be about the same price it is now in 30 years, but a little bit lower because the technology gets better at producing corn. Like computer goods, they drop in price. We're used to inflation now, everything goes up in price. That didn't happen back then. So what stopped all this right here? Well, that would have been basically the election of Woodrow Wilson. So Woodrow Wilson was not a classical liberal. He did not like those ideas. And he put in basically all of the things that the classical liberals would have been against, including the Federal Reserve System. So the Federal Reserve System initially supposedly tied the US currency to gold, but what it did was it printed a lot of money, claimed it was backed by gold, and then under FDR they defaulted on it because they printed more money than they had gold back. And that printing continued. We had multiple defaults on the gold standard. One was in 33, one was in the 70s. After World War II, there was something else called the Bretton Woods Agreement, which we'll go into. There's also the crash year of 29. So what caused the crash of 29? Well, sort of the same thing that's causing bubble cycles now. Throughout the 20s, after the Fed was created, government printed tons of money. What happens when you print tons of money? Stock markets prices go up. And then the central bank head, I believe it was Louis Strong, something like that, at that point in time. The Brits were putting pressure on the US because the US was more conservative on monetary policy than Britain. So both of them were supposedly on the gold standard. The pound was backed by gold, the US dollar was backed by gold. But the Brits were printing a lot more pounds than the US for dollars. They were upset all the gold was flowing to the United States. So the US Fed changed monetary policy. Actually, yeah, and tried to be, I think, a little bit more stable in the currency, and they ended up bursting the bubble of the stock market, which then crashed. So go into that in a little more detail with other graphs. So what ideas were popular back then? Well, again, this would have been the era where you had completely free business doing whatever you want to, making tons of money. And the labor union movement started out of that. What now would be the communist movement started out of that. They probably had, certainly the labor union had some legitimate gripes, but if you look at the ideas out of the Communist Manifesto, well, we adopted a lot. Heavy and progressive income tax. Woodrow Wilson stuck that in. Initially, it was only supposed to be, I think, 5% on people that made more than the equivalent of a few million a year, but very quickly it went up to 90% income tax when World War I started. So that didn't last very long. And central bank, which again was initially supposed to be tied to the gold standard, but they printed way more money than they had gold to back it. So both of those initial ideas defaulted quickly. Other ones of these are considered common now. Obviously, public education for all came out of that sort of stuff. So Woodrow Wilson created the Fed. The Fed claimed it was going to tie the US currency to the dollar. Most of the other countries around the world did the same thing. The British claimed they were going to tie the pound to the dollar, but governments do just what the blacksmiths did. Oh, we'd like to spend more money, so let's just print more whether we have gold to back it or not. So they did that, created the 1920s bubble of the stock market, crashed the stock market in 29 to 33. A bunch of people then had gold certificates. Supposedly you go to the bank, bring your gold certificate, say I want gold. The banks didn't have the gold to back it. So there were runs on the banks, and FDR's response to this was, you're not allowed to own gold anymore. It's illegal. So by executive order, not even a vote of Congress, he said gold ownership in the United States is illegal. He seized all of the gold from all the banks in the United States and built a building called the Fort Knox Depository to stick it all in. Individual Americans were allowed to have a couple of gold coins. I haven't heard of any cases of those being seized, but certainly all the banks' ownership of gold.
So where's that building again?
Fort Knox, Kentucky.
What is that?
It's a big building with a bunch of gold in it. And there's another one in New York.
Bunch of guns around it too, and tanks.
So what?
Bunch of guns and tanks around it.
Yep, tanks around it. Yep.
Yeah.
You're gonna watch old James Bond movies. They show the outside. I'm not sure the inside of Goldfinger is legitimate, but. And of course, what he's trying to do in there is destroy all the gold in Fort Knox to change the worldwide value of it. Interesting idea. And they do mention in that it was illegal, I think, for Americans to own gold at that time. And it stayed illegal to own gold from 33 till Nixon defaulted on the second gold standard in the 70s. You can own gold jewelry, but not gold coins. Some people would make fun of this by taking a gold coin and turning it into a pendant. I don't think they got in trouble for that, but it was illegal.
When you say marriage rings.
Yes, that was still allowed. Yeah. And there was a while FDR was basically in the Oval Office declaring what the exchange rate to gold was, basically writing on a board, which seems pretty bizarre, but that's what was done. So that was the first US gold standard that the US defaulted on. The US also defaulted on the second gold standard, which was the Bretton Woods Agreement. So after World War II, the West, the Allies, won World War II, and John Maynard Keynes and a bunch of other people, Alger Hiss, you may have heard of in other contexts, got together in Bretton Woods, I think New Hampshire, and came up with an idea of the future international exchange system. And they didn't want floating currencies. They wanted everything to be pegged together because just like the gold standard, that's more stable. But they created this weird hybrid gold standard where it was still illegal for Americans to own gold, but all the world currencies were still tied to it, but only central banks could trade back and forth. So the US dollar was supposed to be pegged to gold at $35 an ounce. And then the British pound was supposed to be pegged to the dollar, the French franc was pegged to the dollar, German Deutschmark was pegged to the dollar, yen was changed to the dollar, and they were all supposed to be tied to that. And again, the US was only supposed to print enough dollars that had gold to back it. Yeah. And right now, how much is gold per ounce? Yeah, around 2,000. So clearly something went wrong with this. And the thing that went wrong, again, is the government did what you expect them to do. They printed way more money than they had gold to back it, particularly in the 60s. We needed to pay for the Vietnam War, Lyndon Johnson's Great Society program, Medicare, Medicaid, all these sort of things. They didn't have the money to pay for them. They didn't raise taxes, so they printed money. Well, the French actually didn't like this.
Can you imagine that?
Strange, you know. So the French, yes. The French had a reasonably free market, I guess, Treasury Secretary. I'm not sure what his position is, but he decided to call the US on this. If you ever get a chance to go to New York, you can tour the Federal Reserve Building. You go in and you take an elevator down to the bedrock beneath New York City. More movie references than Goldfinger. If you watch Die Hard 3, I think it is, they're trying to rob the gold in that. So what is down there is a bunch of jail cells filled with gold. And what was supposed to happen if the French brought in a bunch of dollars, then they would say, we want to exchange our dollars for gold. And the US was supposed to take our gold out of the US jail cell and stick it in the French jail cell. And then it would be the French gold. Well, the French kept doing this over and over again. And I think there was a time period the Brits tried to bail out the US on this and lend us gold. And I think there was a gold delivery place in, maybe it was in London, and the floor actually collapsed as so much gold was being delivered. So they claimed they couldn't deliver anymore. I think the Swiss stepped in, being the Swiss, saying, we'll do it. And eventually Nixon just said, we don't have any gold, we default. But of course, he didn't really say we default. I think your textbook calls this the Jamaican Agreement, where all the governments got together and said, well, we decided not to be on the gold standard anymore. It's all voluntary.
So what did the French say about it?
Well, the French weren't, I guess, real happy with the US at that point. So obviously they weren't that happy not getting all their gold back. I don't know what happened with that.
Just like that.
Yeah. Well, I don't know how this one was resolved because I only read it when it was occurring, but we had a more recent thing just in the last 10 years or so with the Germans. Angela Merkel wanted the German gold back, which was also still there. They had been happy to leave it there during the Cold War, but now they decided maybe we'll want it in Germany. And the US government's response was, well, we can't move gold internationally. That's just too complex. We can't do it. Maybe over 20 years, we could give it back to you gradually. And obviously the Germans didn't particularly like this. And I don't know how it was finally resolved.
Do you think it's there?
I actually don't know, since there have been people like Ron Paul keeps demanding an audit of Fort Knox, which hasn't been done. Right now, there's speculations. I guess physical gold. There's a big gap between the price of physical gold and the ETF gold, exchange traded. Some people believe there isn't enough gold to back the ETFs. Some people believe that too. It's hard to say. It's possible. It certainly wouldn't. Governments do behave that way. So what's happening more recently with US government money printing? Well, we've printed more money in the last few years than we have in many decades before that. So this is the monetary base in the United States. Gradually, over the years, we've printed tons of it. During the last economic crisis, they basically doubled the monetary base. So it went from $1 trillion in circulation up to $2. Then you had even more money printing, I guess, up to $4. And in the recent financial crisis, they've, again, drastically increased the amount of dollars in circulation. So what do they do with this? Well, obviously, most of the US government spending right now is not tax financed, it's printing financed. And you're going to comment on why in a recession, these bars are recessions, is the US stock market going up? Well, that's the reason. Tons of money is being printed, it has to go somewhere. Why are real estate prices going up? Now, one thing is people are getting all their stimulus checks and buying GameStop, but also the government's keeping interest rates artificially low, and this money's got to go somewhere. So it typically causes asset bubbles. If we had time, if you look in the 70s, after Nixon defaulted on the gold standard, there was a brief time period the US tried to fight inflation. So they would raise short-term interest rates. Each time they raised short-term interest rates, the stock market would crash. US would go into a recession, an election was coming up. Oh, we don't want to do that. We'll print more money. Stock market goes back up. Economy gets better. Too much inflation, goes back down. And the entire 70s was like that with the monetary policy. And then finally, Jimmy Carter appointed a guy named Paul Volcker to the Fed. He massively increased interest rates and put the US into a recession. But at least for the next few decades, he stabilized the money supply. And then, of course, we're doing the same kind of problems again. Same time period, of course, Nixon tried to outlaw inflation. He made it illegal for companies to give people pay raises. He made it illegal for companies to raise prices. That didn't last very long. The only one that lasted out of that was actually oil. So the U.S. government did declare oil prices throughout the 70s. And this had been tried before in World War II. It worked somewhat in World War II in ration coupons. It didn't work too well for Nixon. He gave up on it. Then Ford tried to have a campaign against inflation. Win buttons. With inflation now, it's unpatriotic to ask for pay raises, things like that. So the U.S. has inflation, which is pretty bad, but it's not nearly as bad as other countries. So here is recent Venezuela, 800% inflation. I think it's down now to only 200%. Yep.
Yay.
And if you go back to the 90s in a lot of South American countries, it was even worse. I don't know if I have those or not. There are stories about people ordering a cup of coffee, sitting and drinking it. You might pay afterwards. And they had a chalkboard and they changed the price of the coffee when you were drinking it.
Oh, jeez.
So how would you deal with that sort of a system? Well, when people got paid, they would either try and buy US dollars. A lot of that's available on the black market, even though it wasn't otherwise. I was in that area in the 90s, and when you crossed borders, there were all these teenage kids that would come up to you, you want to change dollars, and you'd get a better deal exchanging with them than you would, I guess, on the official market, because they artificially made their currency a lot more valuable than it really was in Honduras, Nicaragua, etc. So most people, to get paid during this time period, you try and get out of the local currency. You go to the grocery store, buy all your stuff immediately, spend everything you can before it's devalued, or you try and move it into something else like US currency or gold if you can get it. Another example, we mentioned Russia. So Russia is pretty stable. The currency is now. Certainly wasn't in the 90s, 800% or more inflation.
Can you guys even imagine what an 800% inflation would look like? Getting bread that is 800 times more expensive than it was last year, right?
8 times more expensive.
8 times more expensive. And I mean, what I remember is that it was just so skyrocketing at the end of the Soviet Union that they would just add zeros and zeros and zeros to the prices, and you would have to carry a lot of money. Even India, but that's due to the exchange rate. But yeah.
Yeah, in India right now, you carry around packets of currency.
It's a closed packets, basically.
Packets. And they've outlawed, I think, currency over a $5 bill now because they're trying to force everybody to do it basically online so they can track it and tax it more.
And if a foreigner goes to India, which we did, and I was like, I'm going to open up the package and kind of, give the right amount of money. I'm not going to give them a closed package, No, don't do it, because then they have to start counting the money over again. You just give this, block of money, and that's what it is, and then you get the second block of money. So kind of bizarre. Then we have a question. So so right now, we're in the era of COVID, and businesses are closing down. Unemployment rate is skyrocketing all over the world. Yet at the same time, we have housing prices going up like anything. We have inflation. So
Wrong way.
how is that exactly working right now?
Again, yeah, I guess so. What right now, we've got tons of money printing. And everybody is getting a stimulus check. So all of these things will make the stock market go up. But since nobody's producing anything, you're also going to get inflation out of that. I've recently tried to replace washing machines for various properties. And will they define it as inflation? You can't get the cheap models anymore. And you have to wait for the more expensive models. So effectively, the price of that's going up 25, 30%. Housing prices, stock market. And that's what you would expect. You have restrictions on goods, but tons of money. You get inflation in housing, inflation in the stock market, inflation in goods and services. You go to the grocery store, prices are going up.
So what we noticed is that because goods, products that we use in manufacturing are becoming scarce. So a lot of companies are not even producing the lower models because they only have a finite amount of supplies. So they use those supplies to make the higher end stuff so that they, put a higher margins.
Makes sense. Yeah.
So is there any sort of measure that which country is printing more money?
Yeah, you can get something like, here I just listed the United States monetary base. I guess question of how transparent their governments are. But if they publish something like this, you could do a comparison. I have not, the European countries will certainly have that available.
So do you know which country is the worst right now in terms of printing money?
No, I don't.
But Europe is as bad as US. Yeah. What about Russia or Arabs or India or?
Most of the Arab countries peg their currency to the dollar, so they aren't too bad. India, I'm sure, is horrible. Russia seems to be a bit more stable. Yeah. The countries that tend to print the most, now that isn't completely true. Democracies don't tend to want to raise taxes, so it's a way of printing money. But then dictatorships like Zimbabwe tend to do it as well. So, but places like the kingdoms of the Middle East get their revenue off oil, so they don't really have the incentive to debase their currencies.
And neither does China because of the basically positive flow of money into the country through trade, right?
Well, they try and peg their currency to the dollar for exchange rate reasons, and of course, the way they've done that is they bought tons and tons of U.S. debt. So that's the way they control their currency. Effectively, they've kept lending the U.S. money for us to buy their stuff, which worked to them up to a certain point, but now they've got tons of U.S. dollars and I'm not sure what they're worth. Seems to have helped their middle. It isn't a nice sort of free country to live in, but certainly their standard of living has gone up.
I have a question.
Huh?
I'm just still a novice with this all, but how is the problems that are caused by printing more money than you have gold to back it up with? How is that tied to foreign debt in general, if at all?
There could, I guess, right now there is no country that's really on a gold standard. There certainly could be. And I've got a good example of how that would exist that will be coming up in the not too distant future. So I will go on through this and I'll get to that horrible example from history. Here's the Zimbabwe one of, I don't even know how many zeros those are in inflation, but thousands of thousands percent. Oh, it's 98% per day inflation in 2008. So here would be the example I'm thinking of, and it could be linked to foreign debt. What caused the Weimar Republic to collapse? So between World War I and World War II, Germany had a democratically elected republic. Part of their problem was clearly having to pay off the debt allocated to them by them losing World War I. So I guess this could be an example. I think they sort of at one point in time probably tried a gold standard like everybody else did during that time period. But of course, they printed money to pay off the foreign debt, and they printed money to try and finance everything else. The Weimar Republic was a pretty socialist institution. They had all the things that we think of today, socialized medicine, social welfare, etc. The various political parties in Germany between World War I and World War II, I think there was the Communist Party, there was the Social Democrats, there was the Christian Socialists, and then of course, as we came out of that, the National Socialists, there was no free market limited government sort of party. So they printed tons of money to finance all this stuff, and one of it would have been to pay off foreign debt. So if you do have foreign debt, you may print off money to try and pay it off. Another example where that could come up would have been, I guess, the 90s of Latin America. We discussed the massive inflation there. Well, the US banks were lending a lot of money to Latin American countries at that point in time to finance their operations. And for a while, they lent it to them in their own currency. Eventually, they would not do that anymore, and they would only lend in US dollars because it was more stable in most cases. But another strange thing that happened is the US government started guaranteeing bank loans to foreign countries. So if the foreign country defaulted, then the taxpayers were required to bail out the bank that lent them the money. I'm not sure that this is a terribly good incentive from the taxpayer point of view, but obviously the bankers liked it. So
I guess in terms of my question is more, well, that's all excellent, but in terms of like financing government programs socially and economically, is most of that done? You mentioned the money printing as like a source of the stimulus checks and all that, but is most of that financed on a deficit through money printing or through foreign exchange and debt?
in the US, it's all financed through money printing. I don't know of countries that would really normally finance that with foreign exchange debt. There may be a few situations where the IMF or the World Bank or somebody steps in and does help countries with that. But usually, at least in the cases I've studied, they're more likely to do that to lend you money to build a dam. I'm sure there are situations where that has occurred. And of course, what commonly happens is those countries then get massively in debt and they're paying off that forever. That's certainly how Egypt got dependent on the British, and the US got a lot of other countries sort of controlled through that mechanism. But most of the time, certainly in the European countries and the US, it's all financed with money printing. South America, yeah.
So like our deficit hawks is a more accurate term for them, like inflation hawks at that point then, with if there's not really an increase in foreign debt, is it more that there's concern with inflation of the US dollar?
Yeah.
Okay.
Yeah, that would be the case, because right now, I don't know, what is it, maybe half of our annual expenditures are financed just with money printing. And before the last few years, the US has been irresponsible, but they've never done anything like that. So if you go from a $20 trillion debt to a $40 trillion debt, which we'll probably do, and if we continue this not too much longer, how long can a country operate like that? And that, of course, is just the public debt. If you include the unfunded mandates with Social Security, that's already over 100 trillion. So you're talking hundreds of thousands of dollars per US citizen. There's really no way to pay that off.
So I guess when you say like the increase in debt, I mean, I guess the terminology is just confusing me. Like if I'm a country that's printing money, does every dollar that I print add to a debt? And if so, who is that debt to?
Okay, yeah, I see the confusion. The US has a bizarre system which most countries have adopted, and that would be that the Treasury prints the money. No, sorry, the other way around. The Federal Reserve System prints the money, but what do they do with it? They buy debt from the Treasury. And in theory, this makes our central bank independent, so they're supposed to actually be responsible and care about inflation. So at least our system is whenever they print currency, they use it to buy debt. So they're sort of one and the same. If you believe there's some independence of the Federal Reserve System from the Treasury, maybe there was at some point, there certainly really isn't now. So it's sort of a strange mechanism, but the two are tied together. The Fed does buy other things with the US dollar. So most of the time they print currency, they buy debt from the Treasury. During the financial crisis, they went bankrupt.
Could you repeat yourself?
Sure. So during the financial crisis, they didn't buy just US government debt. They bought corporate debt, and they even bought home mortgages. But most of the time, they just print money and buy debt with it, mainly US government debt. Does that?
It seems like a lot to go over in just 1 minute, so I'm trying to digest it all. So if you're buying debt, means you're buying, for example, like a mortgage that someone has at a bank. So the federal government will own that debt and collect from it. Is that what you're kind of saying? Like as an example?
So the Federal Reserve System is, in theory, sort of independent of the government, but not really. So the Federal Reserve System prints money, and it uses it mainly to buy treasury bonds and bills that are issued to finance the US government. They decided during the housing crisis, 2007, 2008, to quote, stabilize the mortgage market. Now, the way the mortgage market works is they don't really go to the local banks, because since the 90s, the local banks don't really keep mortgages. They lend you money to buy a house, and then they securitize the mortgage and they sell it to Fannie Mae, which is a government guaranteed, but again, supposedly independent entity that actually issues stock. So they would then buy the mortgages, basically the mortgage-backed securities issued by them.
Okay, so the US debt is, for all intents and purposes, owned by the Federal Reserve Bank system?
That's correct.
Okay,
So-
wow, that's wild.
Yeah, the major holders are the Federal Reserve System, China, and Japan.
Yeah.
But I think the Federal Reserve System is probably the biggest holder right now.
Thank you.
So it's rather weird when you go and buy something and you spend $1. Well, what are you spending? You're mainly spending government debt. But at some point in time, you would have spent home mortgages. At some point in time, you would have spent bankrupt Hertz bonds. And this is just in the United States as a legacy of Bretton Woods. The euro is about backed by the US dollar as well. When we were in Dubai and spending dirhams, they were mainly backed by US dollars. Some of the Chinese, Japanese currency, they're all backed by US. Basically, dollars are debt, which are sort of the same thing. So on the Weimar Republic example, again, they were printing all this money to finance their own social programs, to pay off the debt to other countries. And this shows the horrible situation of the woman burning currency to stay warm because currency was cheaper than wood. And I think you can give some examples of other things involving bread. Or,
Oh,
yes.
yeah, I mean,
Yeah.
in the Soviet Union, basically bread was so cheap that farmers, and when I was a kid, if we were in a countryside in our family farm and, we were as kids, we were sent to the store to get, 10 breads per kid so that we can feed them to our cows and pigs. Because it was cheap.
So sort of a similar thing, and that would involve price controls on bread.
There were no prices in Soviet Union.
Yeah, okay. You just wouldn't cook what bread was there.
No, yeah, the funny thing about Soviet Union was that the prices remained same for 30 years until we got to the end of the Soviet Union. And then it was, I have no idea how on earth the price of the bread was the same for 30 years. In fact, the prices were printed on every single product on the back as they were manufactured. So there were no market prices whatsoever.
So this example, I guess, is probably sort of one of the worst ones in US history. Why did the German people back Hitler? Their republic completely collapsed, largely due to money printing. You can't do business, you can't buy things, nobody can trade stuff, because basically they have no value in their own currency. I don't know how much effort there was to get outside currencies that were more stable. But basically, the instability and all the unemployment problems in Germany as a result of this made somebody like a Hitler be able to step in. And hard to say something good about Hitler, but he did apparently stabilize the money supply, also built the interstate system, and killed lots of people. Yeah. So anytime you have this sort of a cycle, that can cause problems in the US. 23, everything was pretty good, but obviously we have the stock market crash caused largely by currency instability. And in the 30s, Great Depression, and people try and blame it on other things, but I guess both the people that I sort of like, the Austrian economists and the monetarist, which would include the Federal Reserve System now, they all blame the Great Depression on monetary policy. They will argue about what the solution should have been, but basically they'll all agree it was printing too much money. And the monetarist would say contracting it too quickly. The people I like would say printing too much in the first place. They'll argue the same thing. FDR did raise taxes to 90% during the Great Depression, which sort of didn't encourage business activity as well. All that was going on in the 20s and then the 30s. And here's our example from Zimbabwe. I have a few of these. I think I paid $20 for them. They're now worth more than that. So this is a $100 trillion bill. Obviously, their currency collapsed completely. Nobody uses it in Zimbabwe, but they are good collector's items.
This is a good one.
Yep.
How
And
much
this-
is that? 100 what?
100 trillion.
Wow.
And before that, they had a trillion and 100 million, and they were all issued, I think, in the last year.
So, correct me if I'm wrong, I guess at one point what they were trading that money for American money and then keeping the American money, right? Is that what they were doing?
That would certainly be what, well, I guess I don't know when it broke down, how that would have occurred. I don't know if they, eventually what happened was that was done and this just collapsed and they just used US dollars.
Yeah.
So there's probably enough US dollars in Africa that could keep it going. I don't know enough about the Zimbabwe history to know if they tried to outlaw dollar use or not. My guess is they did. I know another thing they did, they made it illegal for white people to own property in Zimbabwe. And then they seized all the farms from white families and they all left. So a lot of
Friends who did just donate them.
from Zimbabwe.
So do you know what that would buy you?
But probably it depended
100
on, you know,
trillion.
I'd assume a day later it would buy less. You know?
Yeah. So can't they just take all of those zeros away and start again?
Yep, and that's been done by
Right.
governments over and over again too. And they claim, you know, now that we take all the zeros away, we'll be responsible this time.
Oh,
Yeah.
Sure, right?
Right.
How does it run so wide? Like I guess, and just like how does it change so rapidly for a country that size in 24 hours? Like what, they just keep printing more money, they just can't stop, or?
I think they keep printing more money, and then of course the populace doesn't have any confidence in it. If US citizens lost confidence in the dollar and every day, well, if you get $1, I'm going to try and buy gold, what's going to happen? Then the dollar is quickly going to become less and less valuable. And we're seeing that to a far more limited extent right now as Bitcoin goes to 50,000, as the stock market goes up during a recession, as housing prices go up. So at one point, you know, at what point do you think if I go to the grocery store tomorrow, I won't be able to buy as much as today?
so
Once you get that mindset, you're going to start spending it really quickly and you don't want it, you're going to get rid of it.
that's exactly what happened in the end of Soviet Union, as the Soviet Union economy was collapsing, by 88 and so, and it got really, really worse by 1990, and that's where, Soviet Union ended in 91, right? So, I mean, at the time, and I was there, I mean, everybody wanted to get rid of the money as soon as they got their payday because they could buy just anything that was available. And of course, nothing was available. So literally anything, because barter trade at the time was so much better than actually having cash in the hand. And I guess that's what, absolutely answers to that question that, we would buy absolutely anything and we still make fun of it, that we would buy products that we don't need. So if you open my grandmother's closet, she would have probably a zillion matchboxes over there, or candles, which, we're never going to consume during our lifetime, but it was better to buy those candles because maybe they will be useful one day or the next generations, because nobody wanted to have money. Hey, dinner. We will find a lot from my grandmother's and even my mom's closets that we still use. Sorry.
Still today.
We still use the bed linen that everybody was buying up, at the time, but we wanted to get rid of, which we have been using the same kind of, because closets were full of those, right? Crazy times.
Well, as inflation tends to pick up, there, of course, is also generally an effort by governmental entities to not want people to know what the inflation rate is. And domestically, our government is guilty of that as well. They keep redefining how to calculate inflation. If you go back to the 70s and they admitted there was a high inflation. They show here around 15% around 1980. There was what was called bracket creep, where you really didn't make any more money in buying power, but your salary went up, so it pushed you into a higher tax bracket. And I guess pre-Reagan, the top tax bracket, income tax was 70 federal plus state. If you go back before Kennedy, it was 90 federal. So there were something like 20 tax brackets in the 70s. Reagan cut taxes and then cut them down, I think, to 2, and then the Bushes, et cetera, added them back up. So you had this bracket creep phenomena. One of the responses to that, I think the Reagan administration did this, I'm not sure, but they started indexing the tax brackets to inflation, which we do now. So every year, the 10% tax bracket is going to be a little bit wider. At some point in time around that, I think it was before Reagan, they started indexing Social Security to inflation. So if you got Social Security, your check went up a little bit. So the government's response to this, well, at one point in time, they indexed to it, and then they decided, why don't we change how we calculate it so we really don't have to give the Social Security people as much money as we said we would. And we can still get some bracket creep, but maybe people won't understand it as much. So, and Reagan, I think, did this too. He appointed a blue ribbon commission. I remember Alan Greenspan was on it, and they studied how the CPI is calculated. And they decided, of course, that inflation is overestimated in the US. We will recalculate it and be more realistic. So the things they did was they did a basket of goods system. Before this, you could say, well, if steak prices go up, that's inflation. But now we could do a basket of steak, chicken, hamburger, and if one goes up, you'll just say you switch to the other one. So it really doesn't go up as much. And these are all equivalent. And at a various cycle in here, they also put in something called Hedonic Corrections. For example, if your car this year are now, since I'm looking at appliances, your dishwasher this year is a nicer one than last year. Well, if prices didn't go up, even if the cheaper one isn't available because it's not the same product. Hedonic means hedonism. So they put in all these corrections, and suddenly the blue line goes down to the red line, and inflation isn't as high as it used to be. So at least according to the economist at Shadow Stats, if we calculated inflation the old way, now what would be, it looks like 8%, where the government's claiming it's something like 3%. Now, go to the grocery store, I certainly see prices going up. I certainly don't think it's 3%.
So how exactly do the governments do that? I know it's a naive question, but still.
They do it because they don't want to spend money on people's retirement and Social Security.
Oh,
So the buying power goes down every year, and effectively it's a way of raising taxes every year. Because again, the brackets are
Without
indexed.
saying they're raising taxes.
Yeah, without saying they're raising taxes. And some of the
The way they
people
can get more money, your money without you
knowing it.
knowing it.
Yeah.
do you guys want to take a break for 10 minutes?
So any, I guess, other questions from the local audience or the remote audience?
Austin doesn't have a question.
All right. So
I'm good for now.
This is depressing. Are we gonna have any good news?
No, that's a good question. Yeah, international finance may be a little depressing.
It's depressing.
So what does the future hold? Right now, if you do international exchange, one way or another, most of it is still the US dollar. Euros are still largely backed by the US dollar. Most currencies are, so it is still considered the worldwide reserve currency. And that has allowed the US to print a lot more money than it causes inflation domestically because we've been able to export it. One of the old statements that particularly when people were more worried about inflation in the 70s that was used is it's the US currency, but it's the world's problem. So what does the future lie? Will other countries try and get off the dollar? Certainly some of them have. If they do that, what will they go to? Well, the old tried and true, of course, would be gold. The new competitor would be Bitcoin. has the disadvantage that it has a very short track record, has the advantage it's very easy and cheap to transfer around anywhere in the world. So for example, the Chinese trying to get money out of their own country can use Bitcoin even if there's controls. I think it's popular there, and I believe in Nigeria has adopted a lot of it too.
What do you believe is the future of Bitcoin?
I don't know. I mean, it's in the software that only so much of it can be printed and then no more. So it's guaranteed not to have an inflation issue. At the moment, it just looks like a speculative bubble.
Yeah.
But, you know, I guess if I was going to bet, again, 100 years from now, what would be of value? I'll certainly say this. I would probably bet on Bitcoin over dollars. I'd be more likely to bet on gold. The dollar, again, we've gone down by 99% in the last 100 years, and we're going down quicker now. So it might still be usable, but, you know, again, one of the things I mentioned, Social Security, yeah, we'll probably get it. Maybe your check will buy a tank of gas. They're going to inflate their way out of it some way. Yeah, more depressing stuff, right?
Thank you.
So 2017, Bitcoin was trading for about, I don't know, $1,400.
Yep.
56 as of today.
Yep. So it does seem like an insane speculative bubble, like something a company like Tesla and a lot of them. And I think over the short run that's true. I think it's going to go back down.
It's now 5,600.
So 50,000. Yeah, 56,000. So it's going to be volatile. I wouldn't be surprised if it dropped by 50%.
30 of that is inside the first year or something like that.
30% for Tron has done better than Bitcoin. Not as far as the total value, but as far as the percentage going up. But you can't buy it here today. I do.
You can't buy Bitcoin.
No, Bitcoin you can buy.
Yeah.
Tron is the other one that you cannot go to a marketplace. The marketplaces that sell Tron will not allow U.S. citizens to buy it.
Interesting. I don't even know what Tron is. Enlighten us. Yeah.
It's a cryptocurrency. I do this stuff.
Sure. Why do you think they've outlawed that one in the States and not the others?
They outlaw certain companies. For example, Coinbase. So in Coinbase, a U.S. citizen can go to Coinbase, open up an account, and then just like any trading company out there, you go ahead and trade and buy this and that. The companies that actually trade Tron, no U.S. citizen is allowed to join that, be a member of that company or trading company. You're not can't join because it's overseas and the way it's managed. I used to have Polymath, which was another Polymath, I think it was. It was a company that I used to have, so I could trade a trading company, and that company got banned in the U.S. and I lost like a lot of money. Long story.
Yeah. There's a lot of
the way that it's regulated, you know, some of these companies are based off, I don't know, different places, and the U.S. is trying to regulate Bitcoin, and they don't want to deal with that stuff.
Yeah.
Get it regulated.
Yeah, right now, obviously, they're trying to tax that. I'll have to read on this story because it's interesting. We mentioned gold being outlawed in the U.S. from 33 to the early 70s. Even in the mid 70s, well, it was legal for Americans to own gold. I don't remember which one it was or the situation, but they could only own coins or bars, and it may have just been international.
Yeah, and I think at one point they were mandated to turn the gold in return for money, right?
That was in 33. You were required. Yeah.
Turn your gold in.
But that happened in the 70s some too. There was
it's insane that the government could do that to your own, you know.
its own citizens.
Yeah.
The American Institute for Economic Research, it's a group I published some stuff with. In the 70s, a guy that founded that, who was a MIT military science professor, Colonel Hayward, he was very into free market limited economics, and he published a newsletter domestically, and he also tried to do international investments where he sold gold shares to US citizens in Switzerland and sold condos in Switzerland. And I don't know exactly how they did it, but they decided what he was doing was illegal. And they basically tried to arrest the guy, and he fled to Switzerland and fought legally from there. And eventually the Swiss banks, which they pretty much always do, caved in. And what happened is they took his assets, he gave up, and I think died a year or so later. But then all of the people, the US citizens that had invested with him, owned gold in Switzerland. The US government seized all the gold, and they wouldn't let them own the gold, but they traded it for treasury bonds or bills, and they gave it back to them. And that was even after gold ownership was supposedly legal.
That's insane.
So other competition, the Chinese yuan is certainly a possibility. It's not really worldwide tradable. People don't trust the Chinese government that much, but they do have a very strong economy. And certainly it could gradually move out into Africa, et cetera, and become a reserve currency. The IMF has special drawing receipts that are a combination of the worldwide different currencies in a basket. And I know there are some reasonably famous people that have decided that they want to get paid in that. So that is a possibility. And then people like George Soros have proposed carbon credits, have a worldwide sort of UN system based on carbon credits, and all the currencies have to be tied to them. And then you have to have the carbon credit to produce carbon, and only so much of that will be produced. In pretty speculative possible ideas.
Is that in place right now?
No, that is a proposal that people like Soros have pushed.
Okay.
But Europe does something of similar
Yeah.
sort that basically there are quotas that how much different European Union members can basically, how big their carbon footprint can be. And if, for example, Estonia's carbon footprint is smaller than the norm, but Spanish footprint is bigger than it's supposed to be. So Spain pays Estonia whatever, for example, some machinery or trains or whatever. So for example, Estonia did receive 8 trains from Spain to Estonia because they overspent their carbon basically.
So it can be traded from government to government, and in the
Yeah.
European system, they regulate it, and sort of treat it like a currency.
But of course, that's an inner club,
Yeah,
right?
that's in there. Then you just have to get everyone to join the club.
Right.
Yeah.
So where does United States lie in that one? Gee,
Right now, they're not in it.
just asking.
Yeah.
Is that gonna, okay, I like that idea.
Yeah.
Yeah.
They were talking about taxing miles.
Yeah. Oregon particularly has proposed that for electric cars, track wherever you go and tax you based on how far you drive. Is that what you're?
Taxing a mile.
If every car has a GPS in it, or these can be tracked wherever you go. So right now, this is the SDR basket. It's about $50, a little around a third, a little less than a third euros and pounds and yen. The Chinese have not yet been added to that, but that's been discussed. And the US reserve currency status has gone down quite a bit recently. That could be related to arguments with China and also money printing. So worldwide backing of using US dollars basically to back other currencies. It looks like, at least in this graph, peaked around 2000 at 70%. Now it's below 60. So we're back in that area. All right, so now some of the mathematics. Yes. Do a little bit on how do you use exchange rates and just on the Bitcoin. But you have to know how to convert dollars to everything else. A very small number of Bitcoin, relatively stable versus the dollar, the euro, gold ounce, Japanese yen, etc. When you do these sort of conversions, what you will always want to do is keep track of your units, as we will point out in the next graph. And this number, as Catlin and I know, is a fixed one that stays set forever, at least I hope, whereas most of these change every year. Yes, sir.
Why is that? Why is that not What is that number not changing, the bottom one? Yeah,
Because that's a fixed currency regime and the UAE government has declared that that's what it's going to be. So they only print more of their own local currency if the US dollar expands.
How can you enforce that in a national state or in an international state? That's not possible.
Well, I guess if it's a government that's relatively rich with oil backing, they can do it pretty easily.
So just say, it's no, say the value that is it.
Yep, that's it. And they can keep enough dollar reserves if they need to sell or buy them to keep them at that. Set it that way. And if you're a responsible government, you can do it relatively easily. If you're an irresponsible government, it gets a lot tougher. When the euro was created, of course, they initially did wide currency pegs when they first had the various Deutschmark pegged against the new euro, and then they gradually got them narrower and narrower. That was easy for Germany to do. It was a lot tougher for Italy, Spain, and Greece.
It was horrible. I was in Germany when that happened.
Okay.
I was paying Deutschmark. Next thing I know, I'm paying euros, and the price did not change. But the exchange rate between the euro and the US,
Yep.
It was pretty bad. So as before, I was getting $3 to $1. Now it was the euro, I was getting, I cannot remember, but it was not the same exchange rate. So my pocket hurt.
Yep.
Although Germans did not see that because it was 1 for 1 for them.
It was more domestic. Yeah.
Yeah.
And initially, the euro was worth, I think, what did it come in at? Initially, it was only 0.8, then went up and went back down.
I know when my first time that I did the exchange was 75 cents. You will get 75 cents will get you €1, and they went up to like $1.25 get you €1, and then they just. I'm not really sure now, but I'm not positive as to what was the change when it first happened. But I remember my first time doing exchange was it was okay. No one.
So, Gary, another, explain that one. I mean, you and I have discussed it, but let's explain to the others the UAE dirham. So what are the benefits from UAE point of view to peg their currency to US dollar versus not doing it? Is it a matter of kind of reliability that, hey, we are some, weird country, small country, nobody knows, we better have, reputable currency? Or what is it exactly about?
That's basically it. It's a smaller country and it makes it a lot easier for them to do business. And particularly, I mean, all of the Middle Eastern countries have done that. Now, it's also easier for them because the worldwide market for oil is always in dollars.
But a lot of countries in the world have done it. A lot of European countries that weren't on euro have pegged there to euro.
Pegged to the euro, yeah.
Or to Deutsche Mark before.
Yeah.
Yeah.
So if you're a government that doesn't print a lot of money, isn't irresponsible, it's relatively easy to do. And for a lot of smaller countries, it increases international trade because you know what the exchange rate will be 10, 20 years from now.
But then if the value of US dollars goes down.
Then yours goes down with it. So they do go together.
Exactly.
So you wouldn't want to, I mean, you obviously wouldn't want to peg your currency against a really unstable currency. And the US dollar is becoming more unstable, but still on the worldwide stage, it's
More stable.
more stable than most.
So which one is more stable, euro or, I gotta ask you, which one is more stable, euro or dollar?
They're about the same. I mean, there have been time periods that some have increased and some, they fluctuated with each other.
Do you see the euro expanding their territory, meaning that like more European countries joining?
They haven't joined recently, and there's a lot of restrictions on joining Eurozone. So they basically need to have their inflation under 3% or something, which was, I mean, it's quite hard for any country to have the inflation that low. So remember, that was the one that is, many countries cannot do. So for example, when Estonia wanted to join Eurozone, we worked on our monetary and fiscal policies like years, and it took like 5 years to get our numbers in place. There was inflation rate was the main one. I can't remember there was anything else,
I think they had a percentage of your budget as a function of GDP.
Oh, that's right, yeah. And your budget had to be positive at all times. which again, in terms of COVID,
Yeah, they certainly wouldn't be doing it.
no,
I don't
they
think it
don't
would
do
have to
it.
be positive. I think they just limited the amount of debt you're allowed to take on each year as a percentage of GDP.
Ours, I think ours have to be, because most cases we have had a budget surplus rather than deficit.
Yeah, you have, but
I
certainly
know, yeah.
Greece, Italy,
Yeah,
Spain, yeah. And my guess would be countries aren't going to be joining it because of what happened to Greece.
Yeah,
So-
Yeah,
I was gonna say that, is Greece part of the EU, right?
Yeah.
yeah.
But they're like broke.
so that the US can get away with what we're doing because we now have one country and one currency. So they just keep printing to finance the deficit.
Not those countries.
Yeah, Greece can't do it, just like California can't do it because they can't print euros. And the Germans are more responsible than the Greeks, so they're not going to keep all the time bailing them out, even though they do some.
Right.
So that is an incentive, since most countries want to behave more like Greece, they're going to be reluctant to join the euro. And, you know, in reality, I think most of the countries would be better off pegging to it than actually using it. But in theory, it would make Greece more responsible. I'm not sure it has.
So you ever see the US dollar going higher than the euro? I'm not really sure what's right now, but
Yeah, it could certainly happen.
would that be possible?
Sure. Yeah.
Although there are many countries together.
Yeah.
Okay.
And
But from a trade point of view, it actually benefits the United States by having a cheaper currency than euro. Because from an international trade point of view, whose countries' products do they buy? It's the US products that are cheaper than European products.
if it's depreciating, which again, then would give
Right.
us pay cuts. So, yeah,
Yeah.
that's. Yeah, as far as the
So
trade.
it is a true statement that from an international trade point of view, it's beneficial to have a cheaper currency.
By
Or is
cheaper,
just-
it would mean the change at a given point in time.
Right.
So if right now the US debased its currency, we would sell more stuff,
Right.
but we would have domestic inflation.
Beneficial country that depend on the value of the US dollar.
It would, yeah, it wouldn't, it wouldn't, I don't think it would be really beneficial for us. Yeah, we'd sell more stuff, but we'd be poorer,
Okay.
you know.
Mhm.
You know, the more transparent or the more honest way of doing that would be say everybody takes a 10% pay cut. But you're not willing to do that, so it's done by money printed. Huh? Yeah.
Say what?
Yeah. Okay, so how do we use this kind of stuff? Well, let's say you are doing business internationally. Your company's worldwide business operations this month generated a profit of 1 million euros, 10 million yen, and 20 bitcoins. Tesla is selling in bitcoins now. How many dollars of profit did your company generate? Well, as I learned when I was a physicist in freshman physics, the most important thing is to write down your units. So we get 1 million euros, and then you make sure you get off the past slide. What is the exchange rate in dollars per euro? And we get 0.890 euros is a dollar.
There's a homework, guys.
Yep.
Pay attention.
So $1 is 0.89 euros. And then the euro cancels here, the euro cancels here, because this one's on the bottom, this one's on the top, and we get something in dollars.
Getting major flashbacks like high school chemistry, so
Yes.
Okay, I'm gonna tell everybody the homework is there, but it's for extra credit.
I see
And
that.
please remember that when you do the faculty evaluations over here. I'm being nice to you guys.
Okay. So.
So the next one's 10 million yen, and then we get the conversion, putting the yen on the bottom, so they cancel, and the dollar on the top. And then you multiply 10 million divided by 111.94, and you get this in dollars, which is down here, the 89,334. So the first one, 1 million divided by 0.89 gives you 1,123,596. The second one, 10 million divided by 111.94 yen. Again, the yen cancel, and we get 89,334, and I forgot to put a little dollar symbol in front of it. And then 20 bitcoins at this point in time was only $46,000. Yeah, that's changed since then. I wrote this a few years ago.
Way beyond.
Yeah, way bigger. And you add them all up and your profit is $1,259,442. So these are the kind of calculations you would do as an accountant looking at your profits in various countries.
Sounds like fun.
Yes.
So this is where the high school science comes handy, guys. If you ever question that.
And then it gets worse. So this is what I was going to assign your homework on, but I may have thought you had more finance background than most people are taking here. So there are three basic international finance relationships. One's called interest rate parity, one is called purchasing power parity, and one is called relative purchasing power parity. For this, you need to have time value of money. So if you took intro finance, you would know the future value is the present value times 1 plus an interest rate, and then you take it to the number of years. So if I have $1,000, I stick it in the bank at 10% for 1 year, then I'd end up with a future value of $1,100. So why do I write it out this way? I am deriving an equation that has to be true. So I could deposit money in a US bank at a US interest rate, and then I would get the first equation. Well, the second equation, I take the present value in dollars, I multiply by the spot or today's exchange rate in euros per dollar, and then I would get that investment in euros. And then I can deposit that in a European bank at the R euro, the little RF refers to risk-free, and then I would get the future value in euros. And what's the F thing at the very end? The Chicago Mercantile Exchange trades futures that will get you to lock in an exchange rate 6 months or a year from now in euros versus dollars. They've never defaulted on these. You can always sign them, you can always lock them in. So I can sign that today, and that guarantees me an exchange rate back. So if both of these are government debt investments, and the governments haven't defaulted on their debt because they can always print more money, then both sides of this equation would be so-called risk-free. So they're guaranteed to occur, right?
But for just the length, for how long?
For however long the future is, 6 months, a year, however long you sign that contract for. Usually it's under a year.
Okay.
And these, of course, if you are an international company, you might sign one of these to guarantee you an exchange rate, to guarantee your profits in the next year, and you can know what they are to get rid of risk.
Do you want to ask honestly how many understood?
Sure, that's a good idea.
How many of you, I think we should not do it. Or should we do it?
There's a down, probably a down, yeah.
I would give it a shot.
Okay.
Yeah, I'm
Trigger,
ready
right?
for the challenge,
Okay.
yeah.
So check the homework out, and we'll post the answers, next Monday on Moodle, right?
Sure.
So for extra credit, go for it. What else would you do with your weekend?
Drink.
You can do both.
Oh,
one could drive you to the other.
Oh my God.
It may help. What do I do?
I did my taxes.
Two
in
shots.
You know, I'll be working on my regional development project. But I think I'll be working on it.
And drinking at the same time.
Yeah.
Don't know about that.
It's my cause.
So I rearranged this equation, and then you have what is called the interest rate parity equation, which is one of the three basic equations on international finance. And this is used to try and do things like predict whether the dollar or the euro will be worth more in a year.
Useful thing.
Useful thing. So you end up with the future exchange rate, meaning maybe in a year, in this case we'll say it's a year, is the spot exchange rate times 1 plus the interest rate in euros over 1 plus the interest rate in dollars. So the interest rate on the top will be the currency on the top. The interest rate on the bottom is going to be the currency on the bottom. So how does this make sense? Well, generally, if you don't have too much central bank intervention, an interest rate is determined largely by the inflation in the country. So if inflation is high in Europe relative to the United States, then this interest rate is going to be higher than this one. That would be the Europeans are printing more currency than the Americans. So in the future, it's going to take more euros to buy a dollar than it does now. So whoever prints the most money, in theory, has the highest interest rate and devalues their currency the most, and then it takes more of their currency to buy the other currency.
How accurate has that been?
This, the thing about this equation is it has to be true. The reason it has to be true, if it's not true, smart people at JP Morgan and all the banks can trade and make money. So as a predictor, as an equation relating the future and the spot, this equation is correct. Now, as a predictor of actually what the exchange rate is a year from now, it's not that great. But it will be the future rate, but it won't necessarily actually be the spot exchange rate a year from now. But unlike the other equations we're going to look at, this equation pretty much always works as long as your currency is publicly tradable. And most of them today are. As I'll mention a little bit later, there used to be ones like the Russia and the Warsaw Pact countries. You could not take that currency out of there. Businesses would operate in Russia and they couldn't take the profits out of the country. So let's say if McDonald's sold burgers there, what would they do with the money? They would buy vodka or caviar or something and bring it out because the currency wasn't convertible.
So there was the Coca-Cola. No, sorry, there wasn't Coca-Cola, but there was Pepsi in Soviet Union.
And that's how they get their profits.
Really?
Yeah.
Interesting.
When I was a college student and went through Checkpoint Charlie into East Germany, I spent 2 days over there. And as a Westerner visiting, we were required to exchange like $50. And you weren't allowed to bring any of the East German currency back. We couldn't find anything worth buying. The food was awful. You had to wait in line forever. There was a candy store we bought candy at, but ultimately we couldn't find stuff to spend it on. I think I did get a copy of Das Kapital or something in German. But we ended up sticking it in our socks and bringing it out through the East German checkpoint, which is illegal, but they didn't mess with us. I do have some illegal East German currency.
Cool though.
It's nice that you're sharing all these illegal stories.
Illegal activities.
That's really nice. Thank you.
We'll see if the modern Germans will come after me for violating the East German laws.
You will mention the trip to Cuba next.
You trade currencies? I got Iraqi dinar. Saddam Hussein's face.
Yeah, she says she has some of those too.
I
It'd be
do,
nice to have a
yeah.
couple.
With Saddam Hussein's face?
Yeah.
I'd be happy to have a couple of them. It'd be neat.
It's mine. They're no longer available.
Yeah. Can't find them.
How much are they worth on eBay is the question.
I don't know. You know what? Thank you.
Yep.
Homework for tonight.
Yeah, those Zimbabwe 100 millions have gone up in value quite a bit. Yeah,
Gee, I don't know where it is.
What I
or
get
100
in trouble.
trillions. Yeah.
Yeah, probably was $100 million in Zimbabwe.
Yes. So here's an example. If 1 year government debt yields in the euro are negative 0.05%, which they were when I wrote this, and the US is 1.2, which I think is basically now zero now, what is the exchange rate for 1 year in the future? So the spot rate was 0.890 euros per dollar. The euro exchange rate was negative 0.5%, so you have 1 minus 0.005. And US is 1.2%, so we have 1 plus 0.012. And we get in this case, since the exchange rate was negative in Europe, the number of euros it takes to buy a dollar actually goes down. So if this wasn't for government intervention, which is actually what makes it negative, this would mean there was actually a decrease, a disinflation rather than an inflation in Europe.
So how many governments are doing negative interest rates? And why on earth do they do it?
A lot of the European ones are. The US is discussing it.
So I mean, Europe has a European Central Bank. So basically Europe has, one body that issues interest rates.
Yep. So
So what exactly, what I'm a management professor, guys, right? Not an economics professor. But I mean, the exchange rates are there to stimulate the economy.
that's what they claim.
Yeah, I did my thing.
Yep. So the lower the interest rate is, the more it benefits the biggest debtors. Who is the biggest debtor? Governments. So a negative interest rate means they have to pay, they actually get paid for being in debt.
Works for me, if I
Yeah.
have a mortgage in Europe.
So it works for debtors and what doesn't work for savers.
No.
Now, they claim it stimulates the economy. If I go way back to my graph, which I guess I will, during what time period in US history did we have the greatest economic growth? Probably between the Civil War and World War I, when we were on the gold standard and we had no inflation.
Do you know how much it grew?
Nope. But I've looked up the numbers before and it was certainly competitive. And of course, what kind of things did we come up with then? Later part of that would have been the airplane. Beginning of part of that would have been the railroad, developed radio, telegraphs, a lot of technological development going on.
US postal system?
Yeah, that would have started with Pony Express. But yeah, the U.S. postal system actually came out of the British postal system. At the beginning of the United States, or the beginning in the colonies, the postal system was private rather than being government. The Brits didn't like that because they wanted a monopoly they could make money off of, and also they wanted to be able to read everybody's mail. So they outlawed the private postal system and took it over, and then the U.S. sort of adopted it from that. History Channel, back when it had history. But no, I mean, you're going to get better economic growth if you have a stable currency because you don't have as much risk. You don't have to worry about this kind of stuff. You can predict the future.
So how does Europe get out of the negative interest rate?
Your central bank could just decide to.
Merkel is not going to allow that, I'm afraid.
Yep. Or whoever. Let's see. The ex-central bank head is now the prime minister of Italy. I forgot who replaced Jelnik
So
or
why
something.
wouldn't they do it? Sorry, I'm just curious about it.
Well, if you didn't have to pay interest on your debt, would you voluntarily do so? It's great to be able to go into debt and declare your own interest rates. I mean,
That's nice.
so the only thing that's really going to force them to be more responsible is probably going to be inflation, when they don't have any choice. That's what happened in the 70s.
Do you know the inflation rate in Europe? But that's country specific.
It'd be country specific.
I can't say that Europe has a higher inflation than US. Because officially they all lie about it, as we know.
Yes.
We don't.
I mean, everybody does, yeah. So, I mean, the only way to measure inflation is basically by our everyday purchases, right?
I have a friend whose job was
Yeah,
basically
yeah,
saying
that's
that
with the whole statistics, works in the central bank in Estonia. Yeah, yeah. How do we calculate it?
And do they play around? I mean,
Yeah, that's what he said, that's what his job is, to play around statistics and how to report the lowest inflation.
Yep.
Making numbers look good, huh?
That's a good idea. Okay.
Oh, we do that honestly in everything we do though. I mean,
Yeah.
You do that with your taxes. You
Of
play
course.
around with it to make your number so good. So you don't pay some,
So what you would prefer would be a nice, simple, transparent system, like no income tax or a flat tax,
a flat tax would be very nice.
and a nice, transparent currency like gold. But we don't have that.
Is it even feasible to like go back to that at this point? Is that like even an option?
What's ultimately probably going to happen is the currency eventually will basically collapse, and then you will go to something like that. That's the only way I see it really happening.
And then just starting over basically.
I think it could happen if people just started trading gold instead of it's easier to spend silver coins and gold instead of dollars. It would be doable. Again, the government would not like it. There have been, there have been some legal cases with that. I'm trying to think of there was a Liberty dollar that tried to create an actual paper currency that was backed by gold and silver. I forgot what that guy's name was, but he did start issuing them, and a few people in little locations started sort of adopting them, trading back and forth. He was, of course, arrested and thrown in jail, and they seized all of them. He liked one of the articles I wrote and sent me like a $10 piece, which I think I've still got somewhere.
Oh, that's cool.
Yeah. But that's what you expect happening is obviously governments don't like that. Right now, probably the Indian government's one of the most active in suppressing use of Bitcoin, use of gold, because they want that local currency.
India's kind of interesting. They kind of don't allow foreign education institutions over there. And it's a very protective nation, considering we looked at GDPs per capita, guys, right? It's a freaking poor country, but you don't allow kind of, foreign trade or institutions in. I don't get it.
What
But
are the
did I
reasons
mention
for it?
that was a socialist government? I think I did, right? Nepal the same way, right?
Yeah.
When we went to Nepal, there's all this Mao.
Hammers and sickles were still in
Hammers
the
and
Mao
sickles
stuff.
and Mao stuff everywhere, and we were like, that was deja vu to
Yeah,
me.
it's still
you know?
historical communist.
I was surprised. Do you think that's a Chinese influence, or is it the leftover Soviet Union kind of nostalgia?
I assume Mao would be Chinese.
That's true.
All right, next equation, purchasing power parity. This is based on the law of one price. Adam Smith, Wealth of Nations. The price of gold should be the same all over the world, with only possible difference being the cost it takes to ship it from one country to another. Because if gold is more expensive in the US than Britain, then people will buy it in Britain, take it to the US and make money. And this should be the same for all goods and services if you have the free flow of labor and capital. Well, we do not have the free flow of labor and capital, so this will not work. But if it was true, then you could simply say the price of a Big Mac in dollars would be the price in euros times the exchange rate of dollars per euros. And you just take this, multiply by the exchange rate, get the price of the other. And if it's different, well, then people are going to move because they'll make more money somewhere else. And all those doctors that don't make a lot of money in Mexico will come to the US and make a lot more money. But we have all sorts of borders to prevent people from doing this. And while some goods are allowed to cross borders, toilets can't come in from Canada, neither can wood, and Nasonex can't come in from the Middle East. So you get massively price differences, and it's caused by control over borders. And the same thing would go with cigarettes from Missouri to Chicago.
Is Nasonex US product?
The stuff I got was made in Belgium, but I think it was a US company originally.
So why don't you buy? Sorry, I'm disturbing your class, but you could technically buy a US product from Dubai for way cheaper price, bring it back to the United States and sell it for a higher price.
Sure.
How is that possible?
United States.
I know the former markets that way. Everything here is expensive. And our own companies which sell farm products overseas at a cheap price. It never makes sense to me.
There's very few free markets. When we talk about it, I can't do it because I'd be arrested and the FDA would come after me. Otherwise, you'd make a ton of money doing that. Just put your Nasonex on eBay and keep shipping it. But one of the opposite things, it goes both ways. When I first went to Dubai, it was raining. I didn't want to get my nice new tennis shoes dirty. I figured I'll just buy some more tennis shoes in Dubai. I put on an old pair of Nikes. I went to Dubai. I went to the mall, and $40 Nikes in the US were $200 in Dubai.
Wow.
And the answer to that was that how much competition is there?
How much competition, and probably some family gets a monopoly right to import them, like I think you mentioned the tires over there.
Yeah, car tires were extremely expensive because there's only like one family business that is importing them. So, what do you do?
And that's how prescriptions are, in the US.
And yeah, it's
Yeah.
monopoly.
Yeah,
Yeah.
so I worked in pharmacy for a really long time and did some of the ordering and new shingles vaccine came out, there was one that was, supposedly like much more effective. And everyone around the world was able to get it, except like we weren't because of all of the
FDA regulations.
yeah, all of the FDA regulations, and there were only like 2 companies that were able to import it with all of the regulations, and then it ended up being super expensive. And it was just,
I think I should have mentioned that, but I think I can't stop myself. So, at one point I went for a checkup for breast cancer, and I was fine, just a regular checkup. And then the head of the basically cancer unit in Cox Hospital told me that if you ever get cancer, would you leave this country, go back to Europe, because you actually have the last generation drugs available that are not available in the United States. I was like, thanks for telling me that. And I had an option of doing that. But what about the Americans? And I'm still shocked by that particular information.
Yeah, the example I always heard from that was the beta blockers they use, I think, to treat you if you had is it heart attack or stroke? Or,
yeah.
those were released in Europe, I think, 10 years before they were released here.
Yeah, a lot of it too is the patent system that we have. It is just.
I used to get my daughter's anti-seizure medication from Canada. Because it wasn't allowed here in this country, and it stopped her seizures immediately. Saved her life, but I couldn't get that from the United States.
Remember we talked about the corruption perception index? Perception is the emphasis.
So this one is called purchasing power parity. And then if we extend it to how do prices change over time, then it's going to be called relative purchasing power parity. And it's going to look just like the last one, interest rate parity. So I guess we'll discuss that. Oh, okay. I did some more examples of all these controls on borders that cause this not to be true. So one of the more recent ones, Trump slapped tariffs on Canadian lumber, NAFTA, free trade. Nope, not really. We've been talking about pharmaceuticals. Well, lots of people were buying them from Canada and other locations. So the Obama administration, I assume at the behest of the pharmaceutical industry, sued both FedEx and UPS for bringing in foreign drugs. And I think UPS settled quickly, FedEx did not. They fought a while. So we can't allow Americans to get cheap foreign drugs.
How do they settle for those?
Pay off the government. And then
Just
don't
like
say
that.
that we're not going to do it anymore. Here's millions of dollars.
That actually ended up becoming a huge problem for us because I worked at the pharmacy on Missouri State's campus. And since it was a college pharmacy, a lot of like professors or kids would have their medications like mailed. But then that became a huge issue because people who were used to just domestically mailing medications to like their family members or whatever, just suddenly was like completely shut down, and you have to get special permits and you get from a special pharmacy who had like licensed the government to do that.
So was the issue with you mailing it, or did they buy it and they tried to mail it? Did something happen?
Yeah, so pharmacies are technically allowed to mail things, but it's kind of a liability. So we never did it. We just said, we can sell this to you, but what you do with it afterwards is none of our business,
And then,
And then they would sell it, and they would mail it to like their family members. But the issue with that is, like FedEx and UPS stopped doing that. So then they would try to mail it through the postal service. But then with the postal service, you can't guarantee what kind of temperatures it's kept under or anything like that. So there were a lot of wasted medications.
so how would FedEx immediately know what it is? Would it be because you're trying to control the temperature of it? I mean, if I just stuck something in FedEx package and mailed it, it was drugs.
They could check it. A lot of them they don't. I think a lot of it is probably still going on, just
Like that.
because if you pack cotton in the bottle and ship it, how are they supposed to know unless they're checking it?
What was it?
There's
Should
an
the
ongoing.
history of being on the black market?
We had an internet or an IT class, and I asked one question about the black market, and ever since then, and she was always in the dark.
No way.
She was always in the dark. You
I'm
know?
telling you.
You know her, she got her back with the meds.
Going on back, foreign steel, particularly the Europeans, were supposedly dumping steel on the US at below market prices. So George Bush, to try and help the local steel manufacturers, placed a tariff on that. At this point in time, I was teaching at a school in Michigan, and it was a pretty wealthy private school, and a bunch of the students worked for companies that supplied Detroit. I actually had a student in class whose family owned a company that would then buy the raw steel, they would make auto parts, and then they would sell them to GM. And of course, this drastically increased their import or their cost of producing their products they sold to GM, and was killing them financially. So this would be, a family worth 10, 20 million. They were reasonably well off. Their response to this, interestingly, when you have a politician that does something you don't like, you give them money. So they sponsored, I don't know, $5,000, $10,000 a plate deal for George Bush. And he showed up for it. And the girl I had in class tried to show the President of the United States a PowerPoint demonstration on how these steel tariffs were damaging their company.
Oh, my God.
And of course, Bush's response was he came in, he did a photo op the family, and he left real quickly. Yes. But not too long after that, they did repeal the steel tariffs. And I mentioned the gold ownership before.
Internet was better than ours.
Yeah, yes.
Awesome.
So I think I already mentioned these examples of $350 Nasonex, or the UAE conversion was 72 dirhams, and it was about 20 bucks.
So remember we discussed it at one point that, we have been lucky enough to travel to many, many countries. And so we kind of took a mission to check the Nasonex prices wherever we
Yes.
went. Right? Kind of big mission at one point.
Yes.
And what we figured out was kind of the market price of Nasonex was around, what did we say, 10 bucks?
Yeah, something like that.
Right. I
So
mean,
Dubai was actually high,
right,
20.
Dubai was high, Turkey was cheaper, and I think Estonia and Europe was somewhere in the middle of it there.
You required a prescription, Turkey and
But that's
Dubai.
true. And we talked about prescriptions,
Yes.
earlier, like with contraceptives and stuff, that's a different world completely, right? But you can form an international market price.
Yeah.
Minus United States.
Minus United States, yes. Okay, so another way of looking at this and measuring around the world that I think may have already been covered, Big Mac Index. They try and do, okay, what do Big Macs cost everywhere? And these vary quite a bit. So why are they going to vary quite a bit? Input costs, meat, and then also labor costs. Labor costs tend to be higher in Europe. Now we're raising our minimum wage, so it'll go up here. The first time I saw a McDonald's automatic order machine was in Spain, which I found strange because they had a really high unemployment rate. So why wouldn't you just hire people? And I assume I looked up their actual minimum wage. It wasn't that high, but they probably have a union agreement. Like the minimum wage in Norway is effectively 20, 25 bucks, but it's not legally enforced. It's like a union agreement throughout the country.
We looked at it in one of my classes. Nick and the rest of them should actually remember that better than I do, basically. We looked at the minimum wages, and there were a bit, hourly wages were kind of comparable to the United States. We looked at UK, we looked at Germany, we looked at France, and they were around 10 bucks. They were pretty much the same, but of course, East Europe is way lower than that.
And the
so
Scandinavian countries were way higher.
we're way higher, that's right, yeah. So what's the federal, do we have a federal,
We got federal in both states. Was it 7 something now, 780?
786, I think is is the Missouri one, isn't it?
I think so. I don't know if Missouri has a federal on top of that. Some, or it has a state on top of that. Some states.
Do they have a federal minimum wage?
Yeah. Yeah, I think it's the same as the Missouri one. And then there's places like California that have a higher.
But it's gonna go up to 15 by 2020. Yeah.
That's the plan. And
Yeah.
Oh, and again, that's something that's expanded. It used to be the minimum wage only applied to interstate trade, which at one point in time was actually driving across state lines. Now they've redefined interstate trade to basically be everything. When I was a college student, minimum wage was $3.35, and they exempted educational institutions from it. So I graded papers for only $2.70.
And that was not very long ago.
That would have been, yeah, that wasn't very long ago.
I remember seeing the server that I worked with at Hemingway's in 1989, 90, somewhere around there. And I saw that she's like $2, $2.13. Yeah, something like that.
For a waitress?
Yeah, I was like, what? What? I was 13, but she had you gotta have the tips on top of that.
And I think, does anybody know, is there a minimum wage separate for waitresses, or is there not?
Yeah, there is, yeah.
You know, and how do
It's
they?
$4.80 or something like that now?
Okay.
Hold on, Google something.
All right.
It looks like the federal minimum wage is $10.30 now,
It's
and
10.30.
Missouri follows that. It just went up like 95 cents since last year.
Okay.
So
Yeah,
for the last 5 years, it's gone over like almost $3. So
I mean,
It's noticeable to small businesses.
Yeah.
I will say it, I bet in 2024, there will be no, all of our McDonald's, all our things will be all automatic. There will be no workers in that area. There will be.
yeah, I think COVID's gonna kill any fast food having indoor seating at all. I mean, I don't think restaurants will open back up. I bet it'll be all drive through or walk up window.
When we were in Iceland, there were almost no restaurants. And if you ate out, it was minimum like $30 a plate.
And the cheapest food was fish soup.
Yeah, that's.
Boy. You don't look like you like fish soup.
I do like.
Salmon soup's good.
I like that. So I'm Nordic. I liked it, but I mean, it was fish soup. But I wouldn't pay $30 for fish soup for sure.
It's $4.30.
For waitresses.
And there also won't be any high schoolers working anywhere.
They're pretty much aren't now. When I was young, it was always high school.
Yeah. You get $50 an hour.
Mm-hmm.
You don't have a Big Mac, it's $1 anymore.
So at least at this point in time, the most expensive Big Mac was in Switzerland. Norway was cheaper, sort of surprises me. US. And then at the other end of the cycle, the cheapest one looks like was in Egypt. So cheap labor and probably, I guess, cheap beef. Big. So what could you use this sort of thing for? Well, over time, even if governments try to prevent it, people will come from Mexico to the United States, and that will affect labor costs. So gradually, while PPP isn't true, if you look at over decades, those prices do tend to change. Americans get their drugs overseas, start flying to foreign countries for surgeries, things like that. Cheap labor will try and find more expensive places to go. So it's a slow process, but gradually these things will change. US companies will move all their factories overseas. I thought I put in relative PPP, maybe I didn't. So, guess we go on to taxation history. So history of taxation would go with, again, on international stuff, the change from taxing via tariffs to income tax. And again, that would have been Woodrow Wilson. If we go through a history of this, so taxation in the United States, the yellow is tariffs. Beginning of the United States, all federal income was tariffs. Basically, they also taxed whiskey and a few other things, but not much of it. The big spikes are interesting. This spike here would have been right after, I guess, again, the War of 1812. And then this is the Civil War one, which is an interesting thing to look at. People will always argue about the Civil War. The South certainly thought it was about slavery because all of their declarations of leaving the Union included slavery. The North, in many ways, actually thought it was more about taxes. Abraham Lincoln he was against slavery, but he also had something called the American Program, where he wanted to massively increase taxes and spend it on infrastructure, and particularly the railroads, because he was a railroad lawyer. So as soon as the Civil War was about to begin, and all the Southern senators and congressmen resigned and left and went south, and the Republicans took over, well, their first, laws were not about slavery. They didn't do that for the Gettysburg Address. The first thing they did was raise tariffs. They raised taxes. And that had been why South Carolina had threatened to secede under Andrew Jackson, even before this, over tariffs. So that was the major source of income to the federal government until, again, Woodrow Wilson put in the income tax, still had tariffs. Gradually, the tariffs went away. Income tax skyrocketed, and of course the share of expenditures of the federal government went from being very small to around 20%. So early US history, federal expenditures 2-3%, now it's showing about 20. And we can look at this more specifically on the tariff issue. Well, again, we had the Morrill tariff, Civil War era tariff. And then by the time we get Woodrow Wilson in, they're cutting tariffs. Then another blame for the Great Depression was the Smoot-Hawley tariff, where they raised them back up. FDR raised both tariffs and I guess Hoover before that. Hoover actually did all the stuff FDR did. And FDR actually ran on a return to free markets and then went the opposite way. So he raised tariffs, he raised income taxes, he raised everything, which probably contributed to the Great Depression. But then after that, we went into the worldwide sort of free trade, very low tariffs era. So now we have the era where, at least as taxes, it's easier to move goods around, but people could move a lot more easily back here because you had no passports. So here you could move people, but not stuff. Now you can move stuff, but not people. So back then, people came to the US to work in factories as cheap labor, and now the US moves stuff to China for cheap labor.
Unless you have big ships blocking the Suez Canal.
Exactly. Or you can't unload anything in California because there's no one to unload it.
There you go.
Yep. Yeah. Another interesting international topic are tax treaties.
15 minutes.
15 minutes? All right. So if I buy a US stock in the United States and you were to buy it under Estonian tax law from Estonia, we would pay different tax rates on the dividends and capital gains on the stock. And this is due to all these international treaties. And one of the things that makes it so is because the US has taxes on interest, dividends, and capital gains. A lot of the European countries don't. The US wants to attract foreign investment, so they say, well, we won't tax you either. So the Americans might have to pay taxes on our investment that you guys don't.
So that's why the Canada didn't tax the Chinese that opened business in Canada.
It might be. It's very possible. I don't
Right.
know.
That's
Yeah.
some sort of a deal as well, that they attracted Chinese companies into Canada, and they said you don't have to pay basically.
And a lot of local cities will do that and say, you don't have to pay
Yeah.
property taxes
Yeah.
for so many years.
Interesting.
So, for example, the interest tax on people from the Czech Republic investing in the US is 0. Dividends is 15% and 0 from annuities. But if you are from Canada, it would be 10, 15, and 15. And there are all these agreements that we've written out with each of these different countries.
There's 130 for China. What's that?
Annuities.
Okay.
I don't know why.
Why would you want to encourage foreign investment over domestic investment?
I guess you would want to encourage both of them. If I was a German citizen, I don't have to pay capital gains taxes. And in fact, US citizens have given up their US citizenship for that reason. Sir John Templeton, famous US investor, and Mark Mobius, who we saw speak in Dubai, had both moved around their citizenship. Is it the Winkleverse brothers that helped fund Facebook, the lawsuit? They gave up their US citizenship, I think, went to Singapore or something. So what the US is trying to do is it knows the Americans are going to invest. We don't really have any choice. In fact, it's almost illegal for us to directly buy stuff overseas, which I will show later. But they also want to get others to invest here, and they're going to be reluctant to do it if they don't get the same tax treatment they would in their own country. That's at least the argument. I didn't particularly like that argument, again, when it applied to student stipends, because I had to pay it when I was at the University of Illinois. And for example, the Russian and Chinese students got their stipends tax-free. So I'm not sure it's terribly fair, but that's the argument. Of course, I'd just be for getting rid of the taxes on all this stuff. One of the ones that is in the news today, because Janet Yellen is talking about it again. For years, the OECD has talked about unfair tax competition, which is just like I'm talking about people giving up their US citizenship and leaving to avoid taxes.
We talked about Ireland.
Ireland, yes. And that's very related to this. So what the OECD wants is basically a worldwide tax system managed by the OECD or the United Nations or something, which is what Janet Yellen proposed today, a worldwide agreement so you can't flee taxes in one location to another, force them to be the same everywhere. Yeah. So why she is proposing this is the corporate tax rate before Trump in the United States was basically the highest in the world. If we look at the US over here, it was around 40% federal. That includes federal plus state. So it's 35% federal plus state. This was made before Trump, so 2014. He cut the federal tax rate down to, I think it's 21 in the US, which is worldwide competitive. Well, Biden wants to raise it back up. But the reason Trump did this is because companies like Burger King have said, we don't want to be a US company, let's be Canadian. And a lot of companies have done that. So part of Biden's plan is to raise that back up, and then Yellen wants to force the rest of the world to do the same thing. And of course, one of the countries that it's done very well, going from one of the poorest in Europe to one of the richest in Europe by cutting these taxes and attracting foreign business, is Ireland, which is shown here third from the right, which only has like a 15% corporate tax rate.
And the other issue is that whether they have to, capital gain taxes is a separate issue.
It's a
right?
separate issue. Yeah.
But kind of correlates with that, right?
Well, the corporate taxes apply to the corporation. Capital gains taxes, they can pay it, but it's generally individual. Of course, one of the reasons beyond money printing the US stock market has done so well is Trump cut the corporate taxes, so profits went up for the companies. And if they raise it back up, then that's going to hurt the stock market too, which would then affect capital gains taxes. So related to that same concept between the US and Europe, it is almost impossible for me as an individual to buy a European stock or a Canadian stock. If I was to do that, in some cases it's illegal, certainly in an IPO, but I would have to fill out all these extra tax forms. So the way it's set up in the United States, if you invest in an international mutual fund, you do not own international stock. You own what's called an American depository receipt. And that bank then owns the international stock, and they require the international company to comply with the SEC rules, but then all of the dividends and all that stock goes to the bank, and then all you own is a claim at that bank for the stock, because they don't like Americans owning stuff overseas because then they can't track it.
But foreigners all over the world are buying S&P 500 all the time.
Yep. So again, this is one of the areas where the US is obsessed with tracking its own citizens, and other countries aren't as much. For example, you can still have a Swiss bank account, but Americans really can't anymore. So we passed something called the Foreign Account Tax Compliance Act, which is why I cannot get a bank account in my wife's country, because they don't want to talk to Americans. So I go into the bank over there and I'd like to open an account, and their response is, you have a US passport, we don't want to deal with you. And I think they said if I stayed there for 2 months, I could go in front of a committee. And if I had a really good excuse, they might allow me to have a bank account, but only if I paid a bunch of extra fees. So they comply with all the US tax regulations and report it to the IRS.
So the reason why they don't want to do it is because of the
IRS.
extra work of, for the factor.
And it used to be that people hid their money in Swiss banks. Well, the IRS kept going after the Swiss banks. A lot of the Swiss banks did business in the US, and they decided Americans are poor at this point anyway. We don't really want to deal with them. So the response finally to the Swiss banks of this is everybody with a US passport in a Swiss bank, they don't get out. We don't want your money. We close all the accounts. So even if you work in Switzerland as an American, there's like one bank at the airport, I think, that's designated to deal with you if you pay extra fees. And I had to deal with this in Dubai. There's extra forms.
Oh, did you? I didn't.
Well, it ended up, it was when I left, and I've still got that account, but I can't access it. It's got a lot of dollar in it. And I still kept getting these, you have to fill out this factor form. You have to fill out this factor form.
Which is also very interesting. I think it's worth mentioning here is that US taxes foreign income, but most countries in the world don't tax our foreign income. So I was like, woo, let me get all of my Dubai salary, and you have to pay taxes to the US government. And as soon as I became a US US resident or married to you, I think that's the way it worked.
Yeah.
As soon as we got married.
I think it actually, as soon as we got married, it said something bizarre like, you can pay taxes if you want to.
Yeah.
Yeah.
As soon as I became a resident,
It's required.
then I had to basically pay US government on all of my foreign income.
Yep.
Tax.
Yep. And technically, there is like a first 100,000 exemption against that, but then you got to fill out forms. So I never actually had to pay taxes in Dubai, but there's all sorts of forms. And the 100,000 is only if you spend the entire year outside the US. If you come back to the US, for each day you spend in the US, you lose 1/365th of your tax exemption. So you're supposed to keep track of all of it.
They make all this shit up on the fly, don't they?
Yeah, pretty much.
Oh,
Yeah.
that's a problem. Regulation.
Yeah. And the other one on here, whoever wrote the Die Hard movies, I find interesting, because the third one, they robbed the Federal Reserve. And the first one, they're stealing bearer bonds. So they knew about finance. And that's another exemption or difference between US and Europe. Again, in the US, if I buy stock, if I buy bonds, it's all registered. The government knows I own it. The company knows I own it. What they were stealing in Die Hard was bearer bonds, which is just like a piece of paper worth $1 million. And it's illegal for Americans to buy those directly. And you can get them in the secondary market, but again, you're supposed to fill out all the tax forms. The reason is, of course, they can't track them. Now, of course, if you lose them, you've lost them. If you lose a registered one, you can get it back. But again, that's all about tracking US citizens. And that's probably a reason when they list all the richest people in the world, it may not be Bezos. The reason they list Bezos is because the US tracks what US citizens own. You don't know what the Queen of England owns. You don't know what
We
these.
laughed about it.
Yeah.
You buy over and over
Yeah.
again. It's like, where's Sheikh Mohammed?
Yeah, you don't know. You know, they have anonymous investments. Americans don't.
Yeah. Where's Putin?
Where's Putin?
So we have 4 minutes left.
All right. So quickly, international investing is a very good idea. You can lower your risk by not just investing in US stocks, but international stocks. I like Vanguard, so I've got the total world index, the total international index, the Europe index, the Asian index, the emerging markets index. These are good ways to diversify overseas. And right now, this may be particularly important. Here I'm showing a graph of relative size of world stock markets. Back 100 years ago, US was only 15%. Now it's 53%. So we're dominating the world stock market. But in fact, our percentage in the economy, world economy, has gone down in recent years.
So how is that the case? I mean, why such discrepancy?
Because everything in the US is securitized. We have home mortgages, all of our companies IPO. If you go around the rest of the world, there's a lot more privately owned companies. That's one reason. The other reason is probably the US market's overvalued. And I
Keep
just,
going to the same square one all the time. Do you guys notice?
Yes. So here, the world GDP, US is only about 24%, over 50% of the stock markets. And the second after that is China, followed by Japan. So here is the US stock market is overvalued argument. We look at a ratio of US stocks versus world stocks, and they're unquestionably valued at an all-time high. Well, around 2000 in the dot-com bubble, when they got up, they went down. So if you have something that it's a record high like this, there's a good chance that it may go back down. So this would be an argument that worldwide international investment might be safer than domestic investment. And I also look at so-called value stocks versus growth stocks, the dot-coms. Right now, the ratio of dot-coms, it isn't as high as it was in 2000, but it's certainly pretty high. So probably the so-called value stocks, low PDEs, are a better investment than the Teslas of the world. So at least right now, I'm in value stocks, domestic and international stuff.
So I'm sorry, I have another question. So has there ever been in the history of stock market where a stock crash was caused by any other country than the United States?
Sure.
Really?
It's always gone through cycles. There was the Asian financial crisis that started in, I don't know, if it was Singapore or Thailand or one of
But
them.
it actually flowed
Yeah.
through the whole world.
Yeah.
It did.
Yeah, it started there, and then all those currencies started crashing, and it caused,
Interesting.
that was, I don't know, 80, was it 98 or something like that. It was a few decades ago. But yeah, I mean, currency crises in other places have spread back. It wasn't as big as like the dot-com bubble, but it did cause contraction.
So are most of them caused by United States simply because of the, world GDP, we hold 24%, right?
Well, one of them started in China too. I mean, that's right. But yeah, most of them. US is the dominant. There is a broader ownership of equities in the US than any place else in the world. And obviously it's 50% of the world stock market. So it's more likely to be here.
And China's businesses are mostly state-owned.
Yeah, but they do publicly trade. I own some Chinese.
That's
Yeah,
true.
they trade through ADRs, international markets.
But are they less likely to cause a bubble or a crisis just because they're state-owned?
Not necessarily, because there's no transparency, and a lot of their banks may actually be bankrupt, and the state props them up. So I don't think so.
Well, isn't that what they're going through right now? The banks are weak.
Guys, ask questions. Don't ask me those questions next time. Ask now.
It's freaking depressing so far.
Yeah, I'm a depressing, cynical lecturer.
Zoomies, do you have questions? Austin, I know you do.
Are you offering discounts for portfolio management?
That was my question, Austin, and I was just wondering if you could recommend like international stocks to buy. What would they be?
Not free.
Yeah. Well, I mean, I probably wouldn't go for individual stocks. I guess what I've listed down here are all ETFs or mutual funds, and I like all of those. And those, most of the Vanguard funds have a very, very low, under 0.1% management fee. I do manage money, or at least sit on a panel of people that manages money for a firm in St. Louis. And due to the FINRA regulations, I'm not even allowed to say what the name of it is, but I can, I can do that for people.
Can I say that?
Yeah.
It's FIFA in St. Louis.
Yeah, see, now I got to cut out the recording.
Yeah.
Yeah. But yeah, FINRA makes it so I can't actually advertise anything unless it goes through compliance. And there's also other weird advice, like I can't advise people if they are clients to buy physical gold. Another one of those weird restrictions. So I do fee-only planning, and I generally charge a couple $100 an hour for that. Or if people transfer with the organization that I can't speak of, then they charge a management fee of around 1%, and I get a chunk of that.
What is your evaluation of like advisement firms like Edward Jones or Northwestern Mutual?
My guess is they're all pretty similar to what we're doing. They're going to charge, like we do, a 1% management fee. If you study finance, if you're interested in learning, you can do a lot better by just going to Vanguard and paying a 0.1% management fee. So it's really a question of whether you want to learn the stuff and handle things yourself, or if you're willing to pay what's a reasonably high fee to have them do it for you.
And so what do they put in their mutual funds? Does Edward Jones and Northwestern Mutual and Vanguard when they're compiling these mutual funds, what sorts of things are they throwing in the mix?
Well, Vanguard basically allows you to choose yourself, and it's a bunch of different ETFs, and you can choose whatever you want to. And they're largely index funds that don't trade very often. A company like Edward Jones or us doesn't create their own funds. They just think they add value by advising you what funds to invest it in. And then you would pay both us a fee, and then embedded would be the actual company's fee.
And what do they base their advisement on?
As far as the stocks, what in theory we add in value is, like, my guess is today of what's more likely to go up. That sometimes works, sometimes doesn't. There probably aren't that many great stock advisors. What more places they can tend to add value is tax management.
So is the success of your portfolio based on the expertise of your individual financial advisor?
The individual advisor, sometimes, a lot of times they don't know that much, and they're just told, here's the model portfolio based on risk. And they'll ask, how much risk are you willing to take on? And then here's a model portfolio, you stick it in. And then the portfolio is developed not by the individual advisor, by example, me and a committee of people I sit with.
Okay. That's more. That causes me to be more rest assured, because I was kind of concerned that, like, individuals who are claiming to have expertise and may not are solely in charge of deciding what's going to be a part of a portfolio for, like, success or failure.
Yeah, most of the people at the front end in these, they're salespeople, and they're not necessarily that knowledgeable. The group I'm working for, I think what they're really good at and have been able to add value is like retirement tax management and figuring out how to do things like Roth conversions, and how do you ideally, if you're 65 or 60, start getting money out of your IRA to minimize taxes in retirement. So you can always add value with something like that, because well, the tax code can change, but it's more set certainly than the stock market. I've done really well this year with giving stock advice, but that's harder to do over the long run.
Oh, thank you for answering my questions.
Sure, happy to.
They can email you. They can
Sure.
have more questions if you're willing to answer.
Sure, why not?
It usually goes, Toby, what are you doing? Answering student emails. Well, thank you so much.
Okay.
Thanks for coming.
I'll go really quickly through what's left.
All right.
So we mentioned earlier investment risk examples. Here are seizures of, like, the Indian government taking oil companies, the Mexican government taking oil companies in 38, 74. And the most interesting one is probably Iran, because that's where a lot of the legacy problems and arguments between the US and Iran developed. So Iran had, at least briefly, a democratically elected prime minister, Mohammad Mossadegh, but he was also a communist. And he seized all of British Petroleum's oil reserves. They didn't like that, so they got the US CIA and British intelligence to overthrow him and then stick in the US dictator, the Shah, who was then eventually overthrown by the current mullahs in Iran. I forgot the guy's name that initially did it. So legacies going back and forth in the US, obviously it probably wasn't a good idea for them to seize all the oil company stuff. It probably wasn't a terribly good idea for us to overthrow their democratically elected government either. But you can see, particularly in the oil industry, all these different risk problems of investing billions of dollars and having other people take your stuff. And I believe you have covered the index of economic freedom, but it's a pretty good measurement of the likelihood of another government, if you invest there, seizing your property. This last one, I actually already mentioned the topics related to that with Russia. So the only thing left on here is further references. I do have some articles on monetary policy with the Foundation for Economic Education under my name, if you're interested. My favorite international finance text that covers this stuff in more detail than you would probably like is International Financial Management. And I also do a similar but shorter lecture to this and a bunch of examples on purchasing power parity and interest rate parity and other stuff on a YouTube channel if you search under my name on YouTube and subscribe to it. Yes, sir.
We get extra class points if we subscribe, share.
It's okay with me. You want that, you know, this will have to be negotiated here. Yeah.
Well, in the homework, if you do the homework and prove that you have shared and what was
Like
it?
and
Like
subscribe.
and
Yeah,
share.
Like and subscribe, okay. Yeah.
They get extra points.
I'm-
But only if you've completed the homework.
I'll-
I wonder how many people are gonna do it.
Yeah, we'll see. Yeah.
Some people were sporty about it.
I know he'll try.
My
He
question
likes
is, you
to
have to
laugh.
get the answers right?
Yeah.
You just have to give it a try.
It's up to you.
I'll think about it.
Oh.
You know what? They have never ever stayed later than 8:45 with me. In fact, they start backing like 8:40. So I'm really impressed. They're just sitting over here.
I was closing the windows.
Yes.
No?
I know you were. We noticed.
We don't pack anymore though, I'm telling you that.
I busted them and now they're behaving.
You can change the
This is
packing
my
behavior.
glass. Thanks for coming.
You are welcome.
Zoomies, do you have any
you.
questions? No, right? Send
No.
emails.
Yes, you underestimate.
Thank you guys, this was fun.
Thank you very much.
Thank you very much.
So next time,
Thank you.
talk about, we go back to our order and we'll do ethics. So I guess it's gonna be my turn again to talk about ethics all over the world. Yeah. All right, Zoomies, I'm gonna say goodbye too.
Yep, good seeing you, everybody.
Yeah.
You are.